is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning across the nation. Good morning worldwide. It is a Wednesday of getting into earnings. That's what we're really doing here. Smart discussions about earnings. Really going to lean on Bloomberg Intelligence. Gina Martin-Adams to join us here, spearheading all of our coverage there. Deborah Aiken out with a luxury memo today. It was shocking. I mean, for those of you on a terminal, you got to see it. LVMH out with earnings. Some people saying they're off the mark. Others saying they're showing a buoyancy and a return out of pandemic.
Celine turtlenecks.
Yeah, Paul Sweeney doing the Bloomberg NEF concert, reduxing his excellence yesterday. Damian Sassower joins us. Damian, they have Ed Hyman coming up in the 8 hour, and in moments, Paul Donovan of UBS. That's a strong morning.
Yeah, very strong morning. And look, G10, everything's cooling off here after last week, Tom. I mean, G10 FX is up versus King Dollar, finally rising after sizable 1 month losses. You know, Swiss franc, you got to keep an eye on Swiss franc. It's a funder, and it's actually the only one of the few G10 currencies that's up over the last 5-day period.
That's what Damian and I do. We look at Euro Swiss here each and every morning. It's come back. It's just part of the mix right now. China doesn't move much. Yen is at that level, but not breaking through to a lot of tension, and we got a better equity market. Brent crude, 89.50, showing the stability off the tensions in the Eastern Mediterranean. We're on Apple CarPlay. Look for that. Download the Bloomberg Business app. And I got briefed yesterday on YouTube by Ray YouTube. Ray YouTube runs my life on YouTube. And all I can say is OMG. Thank you for finding us on YouTube. It is our new distribution. Search there, Bloomberg Podcast. And what we're finding is the live chat is very chatty. It's very, they're on Lisa.
Commenting on my vest again.
They are. It's quite. Well, where did the vest come from?
Everybody,
diamonds.
I invented this. Look, Tom. I mean, everybody's says that the guys with the vests and the business shirts. That was me. That was me in the 1990s. I was the one who created this. I'm a Vanderbilt grad. That's how we do it. We wore khakis. We wore vests. That's how we go.
Is Vanderbilt $100,000 this year? Did I see an article that it's
probably pretty close. I mean, we're not even including the cost of living there.
Does that include the parking spot for the BMW?
Well, no. I mean, come on. If you medical school, maybe, but we liberal arts guys, we don't get.
We'll try to get back on the rails here right now. We're in the Interactive Brokers studios. Thank you, Interactive Brokers, for your global sponsorship of what we do with our Bloomberg Business Flash. Lisa Mateo.
Good morning. Yeah, futures are advancing after ending mixed in Tuesday trading. This, of course, comes after more Fed speak from Chair Jay Powell said once again that interest rates will likely be higher for longer. Now, the Federal Reserve's latest beige book summary of economic conditions around the country that will be released later this afternoon. As far as Nasdaq futures, up about 0.2%, S&P futures up 0.3%, Dow futures up 0.4%. The yield on the 2-year 4.96%. That's down about 2 basis points. The 10-year yield at 4.65%, and that's down about 2 basis points. To commodities, we'll start with spot gold higher at $2,386 an ounce, and over to oil, we have Brent crude at $89 a barrel. Shares of aluminum company Alcoa want to start there. They're higher, up more than 2%, and this is right after Bloomberg reported that President Joe Biden will propose higher tariffs on Chinese steel and aluminum during his visit to Pittsburgh. Alcoa actually reporting earnings after the markets close. Since we mentioned that, I want to check in with U.S. Steel. After that news, they're down 0.3%. Cleveland-Cliffs, they're up 2%. And finally, Tesla, they're up about 1% right now. The company will have shareholders vote again on its $56 billion compensation package for Elon Musk after that Delaware court voided it. It's also asking for a vote to move the company's state of incorporation to Texas from Delaware. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. This is a joy. We start strong again. Ed Hyman in the 8 o'clock hour, and equally as lovely is Paul Donovan. You know his presence out on LinkedIn. He's really committed with UBS to a LinkedIn presence, but far more Paul Donovan. What I would say here, folks, and it's the heart of Bloomberg Surveillance, you don't read somebody for one note. You read them week after week, twice a week, to get a feeling for where they are in the world of economics, finance, and investment. Paul Donovan leads on that. And I got to go here because it is the parlor game. I'm not a fan. But Paul Donovan leads with the problems with Powell. In the first sentence is incendiary. Federal Reserve Chair Powell is not an economist.
Not an economist.
Why are you troubled by that, Paul Donovan?
So I think two reasons. Now, not everyone can be an economist. I fully appreciate that, although the world would be better a place if there were a lot more economists in it. But the issue, I think, with Powell is, first, we're getting very, very superficial analysis. So Powell's saying, inflation is taking longer than expected to get to 2%. That's not really true. Owner's equivalent rent, an obscure price that no one actually pays, is taking longer than expected to get to 2%. Everything else is in disinflation territory. And the real problem, I think, with the Powell Fed generally is there's no philosophy there. There's no medium-term framework in which policy is being done. No, what we're getting is we're data dependent. Well, firstly, that's backwards looking. Secondly, that's looking at unreliable real-time data. We know data quality has deteriorated significantly in the last decade. And Powell's saying, no, I'm just looking backwards. I'm not looking forwards. I'm not going to give you a framework in which to think about policy.
Tom,
and that's why we've got, in my view, unnecessary volatility in the market.
Tom, what sort of response would you expect from someone who graduated Oxford with a master's in economics, Paul Donovan at UBS? Paul, I want to talk about your recent note, The Economics of Getting Thin, Ozempic. Talk to us a little bit about, really, is this going to show up in the numbers and the hard data surrounding growth and inflation globally and in the U.S.?
So growth and inflation as macro concepts, no, not really. Because what we've got to remember here is if you are going to be paying more for miracle diet pills, you've got to spend less somewhere else. So this is primarily about redistribution. You spend less somewhere else to spend more on the new treatment. So redistributive in terms of its nature. And some people say, well, you're just going to spend less on food. No, that doesn't work. The food budget will not cover the cost of the various forms of GLP-1 medication.
So do they dip into their savings? I mean, what are we talking about here? I mean, that's really because you're not going to be insured for Ozempic, are we?
Well, it depends what you're taking it for. If it's for obesity, yes, possibly. If you're taking it, as I would say, recreationally, because you want to change your physical appearance, but it's not a question of obesity, no, then you're probably going to have to find the money for this. Dipping into savings doesn't really work. Because I understand from my pharmaceutical colleagues who are experts in this, you've got to keep taking the drugs. This isn't a one and done deal. It's an ongoing process. And of course, the savings will eventually run out and then you would regain the weight. So that's not necessarily what's going to happen. But I think actually one of the things which isn't getting enough attention in the world of social media, here we are on YouTube, visual physical appearance is becoming elevated in terms of importance. This is potentially quite a socially divisive issue. Some people can afford to change their physical appearance and others cannot.
Let's segue to the next. Ari, put the camera on me right now on YouTube because physical appearance. Lisa, walk over here. Okay. Save me right now. We need a YouTube boost right now. And so we're going to do, we're going to do it.
Tom's been working out. What are you talking about?
It's like a YouTube selfie, folks, with Lisa Mateo. Paul Donovan, let me get back on the tracks here as Damien's gone to my cut and chiseled look. Paul Donovan, what is the prescriptive path for the Fed? What is the Donovan to do for this Federal Reserve?
So I think in an ideal world, we would never have got caught up in the CPI nonsense. The Fed would still be focusing properly on the personal consumer expenditure deflator, a better quality inflation measure overall, and one that is effectively on target. And I think the Fed would be saying, right, we want to follow inflation down. As the PCE deflator continues to come down, we are going to follow that by cutting rates to match it. What we do not want in this environment is rising real interest rates, because the economy is slowing. You've got the highest interest rates in 23 years. You've got a fiscal drag on growth. The economy is slowing down. You don't want to exacerbate that with rising real rates. So I think the message needs to be follow the PCE deflator lower.
Paul Donovan casting shade on Powell and basically casting shade on the obese. I mean, unbelievable. He's got a six-pack. He's chiseled. He has a master's from Oxford. I mean, what do you expect, Tom?
Well, this is a huge issue. John Farrow's actually led surveillance on this. It's a huge, huge issue. And like we've said, you can't find the medicine. It's so popular right now, yeah. And there's a serious purpose for it. And so, Paul Donovan, thank you so much. Particularly important comments there on Chairman Powell. We will feature Mr. Donovan today on single best idea. We say good morning to all of you. Futures up 25. Our single best idea is to give you the news in New York City. Here's John Tucker.
All right, Tom, Israeli Foreign Minister Israel Katz meeting with the foreign ministers of the UK and Germany. He says Israel does have the right to react to Iran's weekend missile and drone attack, and he's calling for sanctions on Iran's missile program. The White House says it's preparing a package targeting Iran's weapons systems. But Bloomberg's Patrick Sykes tells us Iran has a track record of dealing with those.
The symbolism is much more important in this case. It's more of a diplomatic signal to Israel. It's saying, we, your allies, we're all here. We're acting immediately in the days after that attack. And therefore, perhaps, you don't need to go so hard in your planned military response to that attack. Take this as a message of support and feel reassured that we're here for your security.
The leaders of Saudi Arabia and the United Arab Emirates issued a joint statement calling for maximum self-restraint in the Middle East. The U.S. 7th Fleet said a Navy plane flew through the Taiwan Strait today, a day after the U.S. and Chinese defense chiefs held their first talks since November 2022 in an effort to reduce regional tensions. Although the 100-mile-wide strait that divides China from the self-governing island democracy is in international waters, China considers the passage of foreign military aircraft and ships through it a challenge to its sovereignty. And former U.S. Senator and two-term Florida Governor Bob Graham, who gained national prominence as chairman of the Senate Intelligence Committee in the aftermath of the 2001 terror attacks and as an early critic of the Iraq War, has died. He was 87 years old. Graham, who served 3 terms in the Senate, made an unsuccessful bid for the 2004 presidential nomination, emphasizing his opposition to the Iraq invasion. And the desert nation of the United Arab Emirates attempting to dry out from the heaviest rain ever recorded there. A deluge flooded out Dubai International Airport, so that disrupted travel through the world's busiest airfield for international travel. The UAE, which heavily relies on desalination plants to provide water, does conduct cloud seeding in part to increase its dwindling, limited groundwater. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Well, good to see you, sir.
Good to see you, John.
You're
blue
still
button,
here.
Sorry, blue button. Yeah, I'm still here. They brought me back.
Can I participate in this conversation?
I'm sorry.
It's between
We had a
and myself.
huge response yesterday to our discussion on the congestion tax. For those of you worldwide and across the nation, New
Did
York
I get
City
the answer
is-
to the question? Am I going to get
We're in
charged
trouble.
I still
every
don't
time?
have
I think
an
we're
answer.
wrong.
I asked my driver. My Bentley's in the garage, so I asked my driver, and he said he doesn't know either. The Uber driver today didn't know.
I've been told that the technology that the Port Authority is using will perhaps only ding you once.
Once a day.
Yep, and
Right.
What's
the
the Port
New York
Authority?
Police
What about-
Force will not misdirect traffic so that they push you below
the
60
Uber
just
guy-
to come back. I've heard all
The
that.
Uber guy thinks there may be more Uber and Lyft demand because their fee's going to be less, like a lot less.
Interesting.
I don't know. This is a raging debate in New York. I mean, it's sort of like, when the Mets are getting it going. And same kind of thing. Stay with us on YouTube, on Apple CarPlay. A nice Wednesday. Futures up 20. From New York City, Bloomberg Surveillance.
Headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Some news on the housing front. The MBA's mortgage applications index rose 3.3% last week. That was higher than the previous week. Purchases were also up. The average 30-year fixed rate, that was a tick higher at 7.13%. To the markets we go, where NASDAQ futures, they're up about 0.2%. Dow and S&P futures up about 0.3%. The yield on the 2-year, 4.96%. That's down about 2 basis points. The 10-year yield at 4.65%, and that's down about 1 basis point. To earnings we go. We'll start with United. They're up about 5%. They forecasted better than expected profit for this quarter. That started to ease those concerns that Boeing aircraft delays will put pressure on its expansion plans. And speaking of Boeing, its safety record, that's going to be under pressure today. Senators are hearing from a whistleblower's claims of shortcomings in its safety culture. So their shares, well, they're actually up about 0.5%. And LVMH sales, they slowed at the start of the year, but investors actually thought it would be worse. Their ADR's up 3% right now, but it still looks like those wealthy customers pulling back on purchasing Hennessy cognac and also those pricey Louis Vuitton handbags that Mrs. Keene just loves. That is your Bloomberg Business Flash. Tom and Damon.
I give Bloomberg a massive credit for this. There were a number of different reports on this, and every news agency takes a different tack on it. But Lisa, you just nailed it there. And that they went out and they bought a liquor company.
Yep.
And I'm sorry, that's most of the delta. Because Japan was a boom economy, which tells me, Damien, the Chinese went to Japan to buy the fancy bags.
You know, I'm not a big brandy drinker, but I mean, I can't believe with all that company does that liquor's become such a big part of the equation.
It's a big part, and it was a real shortfall, I guess. I don't know. We have Deborah Aiken. She's scheduled to be on with us. She's just written up a huge piece on luxury and forward. Some of you know that it's moving like the big tech stocks, even though it doesn't have that critical mass. Again, futures up 18 at VIX. Damien talking up a 19 VIX. We're down to 18.00. So
cooling off here. Still up over 40% month to date.
Tape.
Yeah.
This is great because it's asset allocation grounded in economics. He's out of Muhlenberg. He's with Schroders, the great British firm, and his asset allocation is founded in economics. So Adam Farstrup joins us right now. Just as simple as I can, IMF comes out and says, hello, things are better, and maybe there's a medium long-term view that's sort of not all that good. What U.S. or global GDP do you strap across your asset allocation? Are you looking for tepid times, or can it be a boom economy like America has right now?
So we're actually looking at dispersion across the global economy. So when you think about what's happening in the U.S. right now, we have a reacceleration as we actually see the U.S. economy moving back into expansion in the second half of this year. So look at May or June. We actually think that cyclical indicator moves into expansion. You get GDP growth for the U.S. around 2.9%. So that's actually pretty reasonable compared to where we were. Now look at the Eurozone. You've got 0.7 as our forecast for GDP growth in the Eurozone this year. However, that sort of cyclical upturn, you look at the PMIs growing, we actually see that creating this opportunity for great companies sitting in Europe and Japan.
Adam, higher for longer doesn't appear to be working very well for fixed income and equity investors. Talk to us about cash. Talk to us about LIBOR alternatives. I know you mentioned that in your most recent note. I mean, is gold really what we're looking at here? Is it just straight out owning the dollar? What do you think?
3-month T-bill, 5.39%.
5.3%, but you're underwater over the last few weeks on that investment. I'm just saying.
Well, so this is a really interesting dynamic, and think about timing here, right? If you can sit on a 2-year, you can close your eyes, rates can go up, and you're not actually going to lose principal, right? But you've got that negative carry that you talk about. So holding cash right now, if you've got a 6-month time horizon and you think about what's happening next, that's a negative carry trade to go out to the 10-year.
What do you see in the equity market? We're coming into earnings season here. Gina Martin-Adams on later is heated that there's a misjudgment. Earnings will be better than expected. Free cash flow will be better than expected. Do you agree?
I do. So we see earnings growth being really solid this year in the U.S. We see that following through outside the U.S. And here's where the quality bent is really interesting. If you look at valuations adjusted for quality, so take sort of price to book, 12-month forward, right? And look at that versus ROE, the U.S. actually doesn't look that expensive.
Right. So value adjusted for quality. So basically, it's not a big versus small or a growth versus value question. But I mean, I guess, where Tom's going, we're going to have to hit Gina with this one. Is it time to double down on growth here, if that's the case? I mean,
well, Adam, what do you think? I mean, I'm hearing this from Gina and others.
Yeah, I wouldn't be short growth from here.
Right.
So what we're looking at, and this is the beauty of being a multi-asset investor, is I don't have to be underweight the U.S. to start adding to Europe, to start adding to Japan. Right. Where I've got these great opportunities.
And this is critical institutionally that some of these big names are underweight. Adam, by definition.
I mean, Adam, he cut his teeth at Rogers Casey. Rogers Casey evaluates managers. He basically looks at the 3 Ps and all that good stuff. Is that stuff that you still look at? Do you still, approach your allocation process and first looking at the business risk and the investment risk of investing in a fund manager?
So we're internal, so I don't invest in external managers anymore. So what we're thinking about, really, let me take it a little bit different direction, is do you want beta or do you want alpha? Right? And so there are times when that alpha starts to really pay, and I think this is one of those times, because you think about buying Japan as a beta bet is a road littered with bodies.
What's amazing is Lisa was going to name her kids Alpha, Beta, Gamma, Delta. The 5th was going to be Epsilon. Would you two wise guys?
So, just for our audience here, Beta is basically the risk of investing in the market point blank, and Alpha is the performance you get over and above the expected beta.
So NVIDIA is an alpha generator.
So we're looking for alpha generators. Everyone's looking for alpha generators. I mean, if you put a McDonald's franchise in the right location in a hedge fund structure, margins of what? 40%. So I can promise you're going to make a pretty nice return on that. So, Adam, talk to us about those type of investments. Where do you look to find those alpha opportunities in the broader asset market?
So I think you really want to start thinking about the broadening within equity markets. So when you look at within the U.S., outside of the Mag 7, it's not even the Mag 7 anymore, right? It's sort of fewer of them that are really pushing things ahead. We see opportunities in the energy space, right? It hasn't really caught up to the oil price. We think about the amount of capital going into energy transition over the next decades. Between now and 2050, we think you've got to spend $120 trillion, $120 billion on capital expenditure to reform the energy distribution network.
So how do you best play that infrastructure certitude everybody has right now?
So I think you've got to be long-term. I think you want to own low-risk operating assets. I think you want to think about who is transforming their business to actually play in that distribution side of the game, because that becomes so important to actually getting that power to where you need it. I mean, you've got power growth. It doesn't sound like a high number. Power growth in the United States, electricity growth rather, of 1% per annum. To flip that into a different perspective, that's the equivalent.
We got to go here. I got to cut off. Then what do you do about AI and the demand for electricity there?
So that is going to drive the demand for electricity, absolutely. So I think you have to invest for electricity growth demand.
Okay, we're out of time. Can you come back? Are you based in New York?
I'm based in New York.
I didn't know that. That's great.
Right around the corner.
It's great. I love when Damien comes in. Damien, it's great. Adam, thank you so much.
Thank you.
Start with Schroeder's here this morning. Futures up 15, make it up 16. Dow futures up 88. The VIX 18.04. First thing I looked at this morning, the 2-year yield.
Yes.
4.96%, maybe 4.97.
Hasn't broken through 5.
It's a cup of coffee like yesterday or the day before. But I'm looking at a real yield, Damien, of 2.24%.
Yeah.
Go back and look 30 years. That's unusual, to say the least.
Yeah, well, the U.S. 10-year's cooled off a bit. We're up 44 bips in April, I believe. We're at something around 464. Crude's cooling off. Gold's cooling off. Copper's cooling off. It's a cooler day here in Midtown Manhattan.
I love it that the Red Sox are playing 500 ball on April, whatever
Yankees
it
lost
is.
3 in a row. I hate to say this. And by the way, if you're a Washington fan out there, let's just call a spade here. The Baltimore Orioles are just a half a game out of the Yankees, and Ovechkin and the Caps will be playing the Rangers in the first round of the NHL playoffs.
Yeah,
Caps.
You read the company brief. Orioles once an hour. That's how we're doing, right, Lisa? That's how we're doing this.
That's correct.
I would suggest that the Red Sox are the last place. Boston Red Sox.
I think they're only a couple games out. It's still early. It's too early to count them out.
We'll have to see. Right now, what I know is we're on Apple CarPlay. Thank you for listening around the world, including rain-soaked Dubai, on Apple CarPlay, on YouTube. Search Bloomberg Podcast. We're out there with an active live chat, to say the least. In the next hour, Ed Hyman. It's Bloomberg Surveillance. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures on the rebound after closing mixed yesterday, and that came after Fed Chair Jay Powell signaled to policymakers we're going to wait a little bit longer than previously expected to cut those interest rates. Right now we have NASDAQ futures and Dow futures down about 0.2%. S&P futures, they're down about 0.3%. The 2-year yield at 4.97%, that's down about 1 basis point. The 10-year yield at 4.66%, and that's down about 1 basis point. We'll head over to commodities. Spot gold higher at $2,387 an ounce, and we have Brent crude at $89 a barrel. More earnings. Technology firm ASML Holding, their ADRs down 4%, posted new orders, fell short of estimates, and that was due to a slowdown in demand for its most advanced machines from the chip-making industry. Then you have Adidas, ADRs up 2%, raised its profit target for the year, and that was thanks to strong demand in its classic Samba sneakers and also a boost from selling off that stockpile of Yeezy footwear. Finally, insurance company Travelers, they're down 2%, and that is after profit missed estimates. That is your Bloomberg Business Flash. Tom and Damian.
Thanks so much, Lisa. Greatly appreciate it. Wonderful to have Paul Donovan in from UBS and Ed Hyman scheduled in the next hour as well. There's, what is it? Last count, 472 books on asset allocation and what to do with your retirement account.
Yes.
Here's the adult book. I've sold so many of these books. Sebastien Page of T. Rowe Price gives me the quality Oriole seats that T. Rowe Price has in Baltimore. The book is Beyond Diversification, What Every Investor Needs to Know About Assets and Asset Allocation, and you get chapters like correlation and something about a freezer and an oven. This is by far and away the smartest book on what Peter Lynch called diversification I've ever seen. Sebastien Page joins us now, and I think it will Danoff over at Fortress Lynch up at Fidelity with 55% of his fund in 10 stocks. That's not the Sebastien Page way, is it?
No, it's not. And the thing about the freezer and the oven, Tom, is that investors too often look at average correlations over time. So right now in the markets, bonds and stocks can go down together. We've learned that in 22. But when investors do their strategic asset allocation studies, they just look back 10 years and average across all these different regimes. So my point is, there's a statistician who said, I have my head in the freezer and my feet in the oven, and on average, I feel great.
Right.
And that's kind of the mistake we make when we use long-term correlations.
But the problem, Sebastien, is most of our listeners and viewers have their head in NVIDIA and their feet in Microsoft. We've never, honestly, folks, we just did the solar eclipse.
Sebastien,
Phil Carre has never seen this, the late Phil Carre.
Sebastien, my daughter Hayden, she's on the way to carpool. She's in traffic right now. She owns the Mag 7, but you're talking about a broadening of equity market performance, right? The average stock, I believe, in U.S. equities is down, 13%? I mean, talk to us a little bit about this broadening. What's gonna drive performance here?
Yeah, you can use the same analogy for that question, right? It's a tale of two markets. If you go back to the end of 21, right, before the world fell apart and we had 550 basis points of hikes and 2 wars, and you ask, what will happen to stocks? No one really would have predicted the S&P being up 11%. However, MSCI, all country world index, equal weighted, is down 13% since then.
This is really important, and Doug Cass led on this down in Florida. He's mourning John Sterling retiring. And Mr. Cass had a chart this morning that showed the Standard & Poor's 483.
Right.
They're back to where they were, and I think it's early 23. And just as Mr. Page said, they're back really to where we were in 2021.
Well, Tom, it's been that lack of participation in value. And the question I think that Sebastien and I both have is what's going to drive people to, reach in their pockets, move out of growth and into value? What do you think is going to be that catalyst, Sebastien?
Yeah, that's a great question. And we are playing the broadening by overweighting value, but we're actually neutral between large and small stocks because small stocks have been so sensitive to higher rates, and we expect rates to stay higher than expectations. So why value? Because, Tom, things can be cheap, and they can be cheap for a long time, and you buy, and it's a trap. European stocks versus U.S. stocks. For the last 10 years, value stocks versus growth stocks. So you need to ask, what is the catalyst?
What is the catalyst for value to move?
So we look at three factors: macro, fundamentals, and sentiment. And to me, those are starting to align. Yeah. On the macro, you have rising oil prices and pressures on commodities in general. That favors value. Higher rates tend to favor value, although the case is not as clear-cut. But you can check the macro catalysts box.
Right.
On the fundamentals, is really interesting. If you look at a chart of year-over-year expected earnings growth, by the end of this year, it's expected that value stocks' earnings will actually be growing faster year-over-year than growth stocks. So you kind of have a fundamental catalyst. Our stock analysts, I'm an asset allocator, but I like to get input from stock analysts from the bottom up. They're talking to industrial CEOs, and they're hearing some optimism. Well, PMI going above 50. Right?
Sebastian, I'm a market strategist, so I like to look at liquidity. I like to look at sentiment. I like to look at flows.
We're surrounded by criminals.
Talk to us about, because I read your note, and you make a great point. What 92nd percentile is the differential between flows into growth over value? Is that right?
Right. So Damien, that's the third catalyst. Right. So you have macro, you have fundamental, and if you look at the
positioning, sentiment, flows.
Relative positioning, the flows into growth mutual funds versus value mutual funds, 92nd percentile on a yearly basis. So when you look at sentiment, usually you want to lean against the wind.
Okay, we got time for one more question. We got some
container rates. We got to talk about container rates, right? Container rates. Shanghai to New York, $3,000 to $5,000, right? Is that not right?
Can I just
Did you not read the news, Tom? Come on.
Please, container rates.
Have another cup of coffee.
What does that mean for investors? Why should we be concerned about shipping rates between New York and Shanghai, Sebastian?
It's part of the mosaic of higher inflation. 4.7% wage growth, low unemployment. I'm gonna pause here and let Tom ask a question. I think
he's drinking. He's drinking his tea. He has bubble tea.
To T. Rowe Price, folks, invented analyst debate. They did it.
What we do.
PIMCO stole it from the people. This is, McNamee way back. Okay. What is the biggest source of debate in T. Rowe Price meetings right now?
So I like to say that we're aggressively neutral between stocks and bonds, Tom. Right. The biggest source of debate right now in my Asset Allocation Committee, I have bulls and I have bears, and that's the most important asset allocation question.
Right.
The bulls are saying, look, earnings are coming back up and rates are coming down over time. There's a place for the market to broaden. The bears are just looking at deceleration, the dynamics of deceleration, the lagged effects of higher rates, and all the risks in the system from deceleration.
20 seconds. Orioles look loaded this year.
I live in Baltimore, so I'm going to be.
Of course, you're talking about freight rates. You live in Baltimore.
I'm going to be completely unbiased. I'm going to say, Tom, for the book, thank you for helping the sales. I give all the proceeds to the T. Rowe Foundation, but there might be an Oriole ticket.
Okay, there we go. That's what we like. It'll be better than what I get from
Mike Bloomberg.
Sebastien Page from Baltimore, home of the Orioles. Thank you so much. He's a T. Rowe Price.
Traffic on I-95.
Lisa, can you get Mr. Page to the door here? He's coming in. I got a traffic jam in the studio. Let me tell you, we're on Apple CarPlay. Even in Baltimore, we're on Apple CarPlay. Download the Bloomberg Business app. And I can't say enough about YouTube. Ray YouTube briefed me yesterday on this. And I really don't get where YouTube's going. But the answer is, you're all watching it. It's in your living rooms. Tucker's watching woodworking videos on YouTube. You're at home, John, watching woodworking videos, right?
I think it's one of the greatest instructive tools ever for, kids, any subject, math,
It's great.
Who just don't get it when they read things, but when they visualize it through YouTube.
It's like revolutionary. We're going with it. Ray YouTube's got us going here with Sparta, and we're doing YouTube this morning. Right now we're doing a lift to the market. I like what Damien says, is everything's just calming down onto a Wednesday into earnings season. Yeah. That's what we see. With our news in New York, John Tucker.
And Tom, Damien, Lisa, the U.S. is going to impose new sanctions on Iran, targeting the country's missile and drone programs. This follows its weekend attack on Israel that threatened to push the Middle East into a wider conflict. Let's get an update in this report from Bloomberg's Erica Herskowitz.
White House National Security Advisor Jake Sullivan said Tuesday sanctions would be unveiled in the coming days and added the U.S. is coordinating with Group of 7 nations and other partners on a comprehensive response. The U.S. will also announce sanctions against entities supporting the Islamic Revolutionary Guard Corps and Iran's defense ministry and expect allies to follow. Iran's drone and missile attack on Israel over the weekend didn't cause any fatalities or serious damage after being largely intercepted by Israeli defense systems alongside U.S., UK, and French military assets. Erica Herskowitz, Bloomberg Radio.
And President Biden calling for higher tariffs on Chinese steel and aluminum. It's part of a series of steps to shore up the American steel sector and win over its workers in this year's election. In a visit to Pittsburgh today, Mr. Biden will propose new 25% tariffs on certain Chinese steel and aluminum products. It's part of the ongoing review, but the U.S. also launches a formal probe into China's shipbuilding industry. Well, the steps target a relatively small segment of the U.S. market, with imports of Chinese steel and aluminum totaling roughly $1.7 billion. But U.S. officials said the announcements were designed to head off an expected surge and safeguard the U.S. market. The president also going to reiterate the United States steel based in Pittsburgh should remain American-owned. And Senate Democrats could end the impeachment trial of Homeland Security Secretary Alejandro Mayorkas today before arguments even begin. The Senate Majority Leader, Chuck Schumer, expected to call votes to dismiss 2 articles of impeachment against Mayorkas after senators are sworn in as jurors midday. It's a move that could scuttle the trial and frustrate Republicans who demanded that House prosecutors be able to make their case. The Democrats appear to be united in opposition to moving forward. And voting has closed across the Solomon Islands in the South Pacific nation's first general election since the government switched diplomatic allegiances from Taiwan to Beijing and struck a secret security pact that has raised fears of the Chinese Navy gaining a foothold in that region. The Solomon Islands' closer relationship with China and a troubled domestic economy weighing on voters' minds as they cast their ballots. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg Radio. Tom.
Into the IMF meetings we go. Spring meetings at the IMF. We're going to have some people down there. John Firo, I believe, talking to Managing Director Georgieva. Damien Sassar, we got the dovetail of a better IMF view, medium-term sogginess. And I'm sorry, 5% is 5%. China delivered a 5% GDP growth. What's that mean for EM? I saw all the currencies weaken.
You got to revise up your expectations for China growth for the full year, certainly. I mean, 5% was their target. We're now looking like we're going to come in closer to 5.5%, maybe even 6% this year, Tom. And you're right. I mean, I think they upgraded IMF, 3.7 to 3.8% for global growth for full year 24. So, a little rosier.
Is Japan a boom economy, even with all of the criticism of their monetary theory?
Again, I follow the dollars, man. And so from what I see, no. The answer would be, so long as that currency can fall out of bed at any given moment, the answer to that would be an astounding no for me, Tom.
How do I play gold? How do I express 2,400 to 2,500 gold through the Damien Sassauer world?
I mean, you hire a truck, you load it up with some bullion, and
I thought you were going to say go down to
ship it up to Rybrook, New York, and there you go. No, I think GLD. I don't own gold personally. I don't really believe in it, but a lot of central banks are really gold.
Could you go long Aussie? I mean, what do you do here?
I mean, no. Well, the commodity correlations. I mean, the gold historically, you would think so. I think probably the currency with the biggest correlation to gold right now, Taiwan dollar, because again,
Taiwan dollar.
I'll tell you why. Because when the carry trades get rolled off, and the Taiwan dollar is a big funding currency, kind of like the Swiss franc, those currencies tend to perform well, and that has a strong correlation to gold because gold is a safe haven asset.
You taking notes here on Taiwan dollar?
No, he's busy woodworking. He's got his table saw and his drill press. And
I carve it in maple whenever he speaks.
You watch YouTube videos on Taiwan dollar as a gold proxy. My head's spinning here. Okay, can Sweeney come back? Let's try that. We will see. Futures up 16 right now. Dow futures up 90. The 2-year yield, we're all watching it. Also watching the 30-year mortgage. We'll talk about that. Sassauer wired into the mortgage market. Please stay with us. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen before the bell in midweek trading. Right now we have NASDAQ Dow futures up 0.2%, S&P futures up 0.3%. The 2-year yield at 4.97%, that's down about 2 basis points. The yield on the 10-year 4.66%, that's down about 1 basis point. To commodities, spot gold is higher at $2,388 an ounce. We have Brent crude at $89 a barrel. Over to layoff news this morning. We're starting with Morgan Stanley. They're up 1%. Bloomberg's learned its plans to start cutting about 50 investment banking jobs in the Asia Pacific region this week. And then also some let-goes at Toshiba. Those ADRs down about 1%. Nikkei Asia is reporting the company may slash 5,000 jobs in Japan. You have Take-Two Interactive Software, that company behind Grand Theft Auto video games. They're up nearly 1%, but it plans to fire 5% of its workforce, drop several projects due to cost cuts. And finally, LL Bean. They're saying more people are shopping online, so it's going to have to lay off workers and reduce the hours of its customer call centers. That is your Bloomberg Business Flash. Tom and Damien.
It's un-American. Damien's doing a Patagonia tweed thing. Do you have any of these LL Bean vests?
I only wear Bruno Cucinelli, Tom.
Yeah, I know that.
Mongolian cashmere for me.
It's like part of America. You go up to Freeport, and there's LL Bean. It was open 24 hours a day, the only store in the world.
Really? You go to the outlets?
Yeah, 50 years ago, it was
I like to pay retail.
Absolutely unique. I know you do. Very well, we'll have to see on that. The newspaper segment has become so humongous, we're cutting short the chat with Damien Sassower.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
A daily look at the front page. It's a Lisa Mateo Hour, brought to you by Interactive Brokers, their bond marketplace. Access their vast selection, over 1 million global fixed income securities, no markups, no built-in spreads, and low transparent commissions. Learn more at ibkr.com/bonds. Lisa, my people briefed me on the newspapers today.
Oh,
wow.
good.
What do you got? Wow.
All right. Citadel's Ken Griffin. He wants to bring this massive New York City skyscraper. The city's hoping it's going to bring more workers back to the office.
53rd and Park.
350 Park Avenue. Very good. Very good. You've done your homework. 62 stories. Going to be completed in 2032, supposedly. It's going to have this public concourse, but the thing is a draw. It can house over 6,000 jobs. The question is, will people come back? They're hoping that it will, and that it'll also help revitalize the neighborhood because a lot of the businesses shut down in the area.
I have an issue here in that, does it give us new jobs, or does it just pull Damien jobs from B and C class properties over to One Vanderbilt or the Griffin Tower? The Diamond Tower is all J.P. Morgan, but you get the picture.
Well, this is not the building that's right next to St. Patrick's Cathedral, is it? Where they purchased the air rights?
Yes, correct.
Oh, this is it.
That
okay.
is it.
See, then I'm a little against this because St. Patty's Cathedral. I don't need shade on St. Patty's. For me that's iconic.
They're getting a big chunk of money.
Okay, well then I'm for it. If jobs are good. Jobs are good. Okay.
We should explain to our worldwide audience that in New York, when you build a tower, there's a thing called air rights, where philanthropic and religious institutions that own those buildings get substantial fees as we build our
150 million, I believe.
I was just going to say 150 million.
Yeah, I'm hoping Vet Bill wants air rights over the house. So
we'll see how that works out.
Somebody build something. Next.
Okay. I didn't realize, you would probably know this better than I. In China, residents who are in steep debt, they're getting blocked from making certain purchases. So this is from the Wall Street Journal. They're saying that in Beijing, they're seizing their salaries, restricting them from getting government jobs. This is if they're in debt. Wow. They're not paying their bills. They're blocking them from access to high-speed trains, air travel. A lot of them forbidden to access those expensive insurance policies. They're told they aren't allowed to go on vacation, stay in nice hotels. Doesn't sound like
prosperity for all to me, Lisa.
So,
that is.
And if they do, they can be arrested too. They can be detained. I wasn't realize about this.
Impassioned discussion with Nora Robini about this once, about old world versus new world workout of bad debt.
Yeah.
And the answer is America's unique. For Nora was heated.
The dollar's unique. That's what makes it unique.
The U.S., we clear markets. There's an economist, Friedrich Hayek, that was pretty good at this. But the idea is if you can't clear a market, and off the pandemic,
it's the legal
that's what
system,
China's
right?
dealing
It's property
with.
rights. I mean, that's really what we talk about. And China, unfortunately, is just not giving investors much confidence that they enforce
is
property
China
rights.
clear in the market now? Are they beyond the pandemic?
No, not yet. Not
so.
quite yet. Not at all. Not
And
at
I
all.
didn't realize, unlike the U.S., China doesn't allow most people to declare bankruptcy.
Yeah,
So that's
the American distinction.
Yeah.
What do you got next?
Okay, Washington Post. More women are getting a boost in prize money at the first major of the year, women's golf. So women are getting some more money. This weekend, Chevron Championship, it takes place. They're increasing the total purse to $7.9 million. That's up from $5.2 million last year. So we're getting a little boost.
Yeah.
This week, Chevron winner is going to take home $1.2 million. Last year, the winner took home $700,000.
Do they have a Caitlin Clark?
Vu, I forget her. I don't remember her full name, but they've got some really talented players in the women's. And again, the focus is always going to be on the men's. I mean, that's where all the highlights are.
Yeah, but I remember Nancy Lopez getting it done.
I mean, there's no Annika Sorenstam, and just to be completely honest with you, but I mean, there are plenty of up and coming players, some really great players. I mean, so it's fun to watch.
Okay, the Masters was a good bounce.
Masters was fun, but I mean, let me tell you, some of the conditions there, I mean, were unbelievable. Day 2 was tough.
What do you think? How's your game starting to spring out here? You over at Top Golf working on it?
It's iffy. I'm working on I'm trying a new swing.
8 hours a
new
week
grip.
at Top Golf. Oh, new grip. Please.
The putting's there, though. The flat stick's going to be there this year.
What's his name that came in second or third? Are you using the bigger, thicker grip?
I like a bigger, thicker grip, Tom.
Okay.
Thanks for that.
Okay. I don't, what do I know?
It's okay. Bigger and thicker grips are.
All I know, I sit in a bar with
all the rage.
I sit in a bar with a drink in my hand, and I just go Titleist, and they're all like, "Oh my God, Lisa, next."
I'm not getting into golf either. Okay, this is the last one. Okay, are you familiar with Axe body spray?
Of course.
Okay, the men use it, right? It's to help attract the ladies. Okay, it's a nice smelling body spray,
like
but
an olive oil kind of.
no, definitely not olive oil.
Okay.
A lot of people wear body sprays, though, in most emerging markets. I mean, body spray is a big thing.
But here's a new market for it, okay? So the Axe body spray, now it's being used by sheep farmers to keep rams from fighting. So this is a whole new market for this body spray, okay? You have the sheep farmers who are using it because it actually masks the hormones to get the boys to stop butting those heads, okay?
Right.
So they get out of control with that. You have the Axe Africa, or in Lynx, it's called Lynx actually in the UK, or Lynx Africa. Those are the scents.
Are you kidding me?
No, and it gets they even use it on the
good smelling
females. You can use it on the females too, not just the males, because it convinces the mother to get these orphan lambs because it distracts them. They're used to using their scent, and they like the orphan lambs.
The Axe Green Geranium Premium Deodorant Body Spray.
Yes. They're using it for sheep and to stop the rams.
Let me tell you, I use Axe pomade, which I feel, and the Shine, the blue one. I love it. Absolutely. That's my only product.
Have you tried the Axe
It's my
Africa
only
then?
product. No, not the spray. I use the pomade for my hair.
Oh,
we got Ed Hyman coming up,
Yes.
and the YouTube audience is going to be more interested in the Royal Pineapple Premium Deodorant Body Spray than what Ed Hyman
Some really good smelling sheep out there.
Lisa, this was twisted today.
It would, but I always got to end you with that kicker, You got to end you by saying, what did she just say?
Lisa Mateo, I think thank you for the newspapers. There we are. Daniel,
lovely.
let's move on here. Let's get back to what we do. Economics, finance, and investment. Jay Powell yesterday with a bit of a shock.
Yeah.
I did not see this coming.
Well, I mean, I don't know to what you were referring, but I believe...
He had comments, he's saying like we're higher for longer.
Well, I mean, higher for longer, sure. I mean, like tell us something we don't know. But I mean, the Fed definitely wants to cut rates in this environment. The question is, will they have the quote-unquote data to be able to do it?
We
have some Fed speak today.
Have the job market.
We've got Mester and Michelle Bauman today. We're going to listen to what they say. It's more of the same. We got the Beige Book. Beige Book, I think, is released today as well, Tom. 8 times a year. I know you study that, really.
Grandma reads the Beige
cover to
Book.
cover.
I don't read the
cover
Beige
to cover.
The Beige Book is the word some, several. A few is critical. When you see a few, that's a big deal. We'll see. Beige Book today, and of course, Michael McKee on top of all of our economic coverage, sort of in a quiet period here as we get into earnings and moving towards, the May 1 Fed meeting. This is one of the greatest songs of all time, and it is not Don Henley's song. This is Mike Campbell. You know him as guitar player for Tom Petty. And he wrote the song, and they ended up taking it to Henley. And this was magical with Mike Campbell on guitar. It is the most valued market economic.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning across the nation. Good morning worldwide. Good morning rain-soaked Dubai. We're hoping to get a report from Dubai here in the hour. Futures up 15, Dow futures up 87. Damian Sassauer says stability of the market. Damian in for Paul Sweeney, who's working with Alex Steele at our NEF conference. Quickly here, Damian, what's the distinction of the market this morning?
Credit spreads, man. Credit spreads are not moving. I mean, so all this talk of doom and gloom and credit spreads seem to be holding in. I can't wait to ask Ed Hyman about that. I mean, credit spreads are something that we're looking at really closely.
Talk about this. We'll get to Mr. Hyman here in a moment for all of you worldwide. Bloomberg Surveillance brought to you by CohnReznick. Advisory Assurance Tax. CohnReznick's Enterprise Risk Management Solutions can help your company drive value through stronger compliance and reporting procedures. Visit CohnReznick.com. Right to it with our Bloomberg Business Flash. Lisa Mateo.
Good morning. Yeah, futures advancing after ending mixed in Tuesday trading. And this comes after more Fed speak. We had Chair Jay Powell once said that interest rates will likely be higher for longer. And the Federal Reserve's Beige Book summary, economic conditions, that will be released this afternoon. Stay tuned for that. Right now, NASDAQ futures up a tick, up 0.1%. Dow futures, S&P futures up about 0.2%. The 2-year yield at 4.96%. That's down about 2 basis points. And the yield on the 10-year at 4.65%. That's down about 1 basis point. To commodities we go. Spot gold higher at $2,386 an ounce. And oil, we have Brent crude at $89 a barrel. NYMEX crude at $84 a barrel. Shares of aluminum company Alcoa, they're higher. They're up 3% right now. And this came after Bloomberg reported President Joe Biden is going to propose higher tariffs on Chinese steel and aluminum during a visit to Pittsburgh. Alcoa actually reports earnings after the markets closed today. Also checking with U.S. Steel, they're little change. And Cleveland-Cliffs, they're up nearly 2%. Over to Tesla, they're up 1%. The company is going to have shareholders vote again on its $56 billion compensation package for Elon Musk after that Delaware court voided it. It's also asking for a vote on moving the company's state of incorporation to Texas from Delaware. That is your Bloomberg Business Flash. Tom and Damian.
Thanks so much, Lisa. Greatly appreciate that. As I've said many times, we protect the copyright of all of our guests. You can go to Evercore ISI to find the daily thoughts of Ed Hyman. I get no greater response. Can you send me Ed's note? Can you send me Ed's? Please, Tom.
You're putting him out of business, Tom.
Oriole tickets. Can you send me Ed's note? No, I can't. And what you need to know is on page 6 of the note, he's talking about the glory of BAA's coming in, a gorgeous spread. That's the Damian world. But on page 4 is classic Ed Hyman. I've been too resistant to this time is different thinking. He goes on to say he's grappling with any number of issues here about the inflation impulse. Ed Hyman, this time is different, or is it not?
I'll let you know next time I see you. I'm really struggling with this. I don't think it's different this time. It's always different. But when you look back at it, I've been through 7 recessions. Everyone has been associated with an inverted yield curve, and there have been no false signals. And so, but live and learn. Maybe it is different this time.
Is it because of the pandemic and fiscal impulse, plus the overlay of an immigration impulse into the lower job market?
AI in there. So the impulse from the pandemic was we put all this money supply in the system and all the checks, which of course go as a pair, and some of that money's still in the system. Yeah. If they're paying the golfers, women golfers more.
Hold on, Ed.
More.
I have to ask you this question. You're on a deserted island. A small island like the Dominican Republic, for example, and you have one indicator, one financial market indicator that you can access. What would that be? Like, what indicator do you lean on right now in this market to look at? What's your favorite?
You're leading the witness here. You know it. So, hands down, credit spreads win. I do a lot of econometric work. They scream at you. And when they go down, it says things are pretty good. And when they go up, it says things are pretty bad.
Yeah.
And right now, spreads are tightening up. They're coming down.
Yeah.
And so at the moment, it's beginning to be spring here in the tri-state area. and everything's looking pretty good. But spreads are really critical. I watched the BAA spread. I don't know if that's one that
Of
you
course,
watch.
no, it's a financial condition. It's one of the primary inputs. I mean, the other thing I think, Tom, that we have to kind of look at is inflation. And, some of our guests, Sebastien, who was on earlier, he would argue that it's the 1-year U.S. Treasury break-even rate, which has basically been guiding markets. So I guess it's it's kind of a tug of war until you get that gap risk, that upside move in spreads. Is it going to be an inflation story here in the U.S., or is it going to be more growth? Is it more Mag 7?
You mean inflation going up or going down?
Going up, staying high and sticky.
Yeah. So at the moment it's staying high. My feeling is that things are slowing. That's my. You won't have anybody on your show here as old as I am.
Well,
hold on.
Wait, you're looking at me.
I know I'm looking at you because I'm a lot
Julian
older.
Robertson once said exactly the same thing to me.
Yeah.
I said,
Oh, wow.
We miss him. We miss him every day.
Gosh, me
To
too.
your disinflation point, and what's important here, folks, is the micro data that Ed Hyman looks at. You have a fabulous chart of multifamily units booming back to the 1970s when you and I wore wider lapels. I mean, the basic line is Jay Powell getting a fake out here. If you were at AEA, Economic Club of New York, and you're there asking Jerome Powell a question after he gives his speech, and you're going to say, hey, Chairman Powell, what about the overcapacity of multifamily? Is there going to be a disinflationary tendency in rents, in OER, and other shelter ideas?
Sure. I mean, it feels to me like it's coming just as sure as I'm sitting here. There's a huge record number of apartments under construction right now. It takes a year and a half. And so that'll be hitting the market this year and next year. Should put downward pressure on rents, which has been one of the stickier parts of it. But as a detail, it'll influence the numbers a lot. But the real question is what happens to wages. And if wages slow, then inflation will slow.
Do you see that in your micro data?
I do, and other people as well. But we survey temp and perm employment agencies every week and ask them what's the wage pressure, and that's been easing off. Our analysts, which I meet with every morning, report wages are slowing a little bit. And so that's there, but that's a slow-moving train. And in the meantime, oil is knocking up.
Yeah, well, that was exactly what I wanted to ask you about commodity prices, the vibrancy of the U.S. consumer. I mean, given mortgage rates going higher, I know spreads have stayed tight, but mortgage rates are going higher. Tom will talk to you about the 30-year fixed. I mean, Ed, talk to us about the resiliency of the U.S. consumer and what that means for employment here in the U.S.
Those are the same thing.
Yeah, exactly.
Employment drives the U.S. consumer. But the mortgage rate, I'm trying to figure out what to do. And the mortgage rate backing up is definitely going to put pressure on housing.
Right.
We survey home builders every week. It's an excellent window on what's happening there. And that's come off a little bit. And when mortgage rates go up, that weakens. And so we'll see if that impacts or not.
You have been committed to Midtown Manhattan. You're an institution. Your thoughts on this round of commercial real estate debacle that we see in New York City and nationwide?
So far it's been okay. Every tightening cycle, and this is my 13th tightening cycle, each of the 13, there have been 7 that have had recessions. So
what cycle does this feel most like to you? Does this remind you of 1990, 1998?
It's like this is its own beast.
It's its own beast.
It's its own post-pandemic beast.
Yeah. And so far it's been resilient. I will say that every cycle feels resilient until it stops.
Right.
And you can't look out the window and tell how the economy is going to be doing tomorrow. You can tell how it's doing today.
I got one time for one question. We're out of time, Ed Hyman. You fly out to Cupertino, you take a cup of coffee with Tim Cook. What do you tell him about the equity spirit of America? With all the challenges Mr. Cook has at Apple, what do you tell him about the stock market, about the idea of finding value over 3 years, 5 years, a decade?
Well, in the short term, I think the market is now going to be under pressure for a bit. But when you ask that question about the longer term, the U.S. economy is pretty good. And, compared to other economies, it's really good. And so I'd put a smiley face.
Ed Hyman, thank you so much for coming in.
It was great to see you.
With Evercore ISI, Ed Hyman, who's done so much for market economics over the years. Right to it with our news in New York City, John Tucker.
And thanks, Tom. Saudi Arabia and the United Arab Emirates calling for maximum self-restraint in the Middle East to spare the region from the dangers of war and its dire consequences. It was an unusually frank joint statement today. Meantime, Stuart Livingston-Wallace, Bloomberg's head of Middle East coverage, has more.
In terms of the UAE and Saudi Arabia, again, two big power players in the region, both incredibly keen for this not to escalate. Both of them are trying to transform their economies. Both of them have this very long-term view about switching away from a fossil fuel-based economy into something a little bit more diverse. They can't do that in a situation where it's this almost perpetual warfare that's going on overhead.
A flurry of diplomacy continues to try to keep Iran's weekend attack on Israel from spiraling into a wider Middle East conflict, and sanctions once again are part of the equation. Now, the near-complete defeat of Iran's drone and missile barrage against Israel Saturday marked a success for air defense systems, but was also a sobering reminder that weapons capable of intercepting these sorts of attacks are in short supply. The Journal reports a global scramble for missiles has meant it now takes around 2 years or more to deliver some air defense interceptors. Two senators, one Republican, one Democrat, promising a measure to regulate stablecoins amid a push in the House and Senate to pass such legislation as soon as next month. Cynthia Lummis, a Wyoming Republican, and Kirsten Gillibrand of New York said today their bill would protect consumers in the U.S. dollar while enabling innovation in payments. And it's an institution in Freeport, Maine. LL Bean has announced it will lay off workers and reduce the hours of its customer call centers. This is a response to what the company says is more people shopping online. The exact number of layoffs hasn't been announced. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom.
John Tucker, thanks so much. Damon, this what John brings up there with LLB, and we're making jokes about it, but it is an American institution. Amazon got this big lift in the pandemic. Everybody had to buy from Amazon. Right. And the key message here is it's continued. Online just won't go away.
No, of course
Everybody every day has to deal with I talked to Ed Hyman about 5 years out. Where's online going to be in 5 years?
Well, what's interesting is when I get my Apple bill, I'm just getting billed. I don't see exactly the line items I'm paying for. I mean, my kids have probably signed up for 4 different Netflix accounts. And so you want to talk about online purchases. How much of that is me not cleaning out my credit card numbers? And but look, to your point, I can't buy Bruno Cucinelli online. I have to go and really feel the cashmere for me personally.
I can't even spell it. Lisa, can you spell Cucinelli?
I can't even say it.
It's like huge. I mean,
Cucinelli, Bruno Cucinelli.
Sassauer is just too much here for us. Futures up 14, Dow futures up 77. From New York City on YouTube, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, NASDAQ Dow futures up 0.2%, S&P futures up about 0.3%. To the bond market we go, 2-year yield at 4.96%. That's down about 2 basis points. The 10-year yield at 4.65%. That's down about 1 basis point. Over to commodities, we have spot gold higher at $2,385 an ounce. We have Brent crude at $89 a barrel. The dollar weaker, Japanese yen, euro, British pound stronger, Bitcoin down nearly 1% at 62, just over 62,000. More earnings coming in. We have Abbott Laboratories down nearly 1%, raised the lower end of its annual profit forecast. Strong sales of medical devices, that really drove first quarter earnings and revenue above expectations. Citizens Financial, they're down 0.5%, reported total deposits for the first quarter that met estimates. And then on the flip side, you have U.S. Bancorp, they're down more than 3%. The lender lowered its full year net interest income guidance. That is your Bloomberg Business Flash. Tom and Damien.
It's sort of like being on the Great Plains. Lisa, thanks so much. It's like being on the Great Plains. And there's that point in the middle of the country that is as far away from oceans as there is. That point in New York State where the coldest winters known to mankind is Center Tendency, Lake Moraine, and Colgate University. If you go to Colgate, you have nothing to do but sit in bars and study, because it's like from November 1 to February 28, it's freezing. Our next guest survived Colgate, and then he survived trading at Bear Stearns.
Oh, head of high yield.
Which was a world unto its own. Ace had the buy tickets here and the sell tickets here. And it was if you survived Bear Stearns, why don't you bring in our esteemed guest who survived the world of Ace Greenberg and Alan Schwartz?
Art DeGaetano, founder and CIO of Bramshill Investments. I mean, what you missed, Tom, is that Art went to Don Bosco Prep, a proper New Jersey, Bergen County prep school. I'm a public school guy. I went to Fort Lee Public High School. But Art, thank you for joining us. I have to ask you, and I know the answer to this already, you talk about fixed income as active asset management, and people say it's dead. And then I look at the numbers of the Bramshill Income Fund, 12.8% over the last 5 years to the plus. The ag, down 7.6%. I mean, you want to talk about outperformance.
1,900 basis points.
Artie, talk to us about Bramshill. Talk to us about your strategy, how you keep things sane, and how you keep things sane in a very, very, very challenging market.
Yeah, thank you for having me today. I'd say it's really all about prep work, and we don't really look at benchmarks. So if you look at last year, we weren't with the spirit of the market when everyone was talking about recession, inverted yield curves, and getting long duration. We were probably about 40% in short-term treasuries. And then November, December, we put about $1.5 billion to work. So very much get prepared for different dislocations in asset classes, different securities, structures, not afraid to put capital to work. So to your point, it probably looks like we're good market timers. It's really just more waiting for the fatter pitches. And then not being afraid to allocate.
So it's a Juan Soto view.
Yeah, sort of. I mean, look, he's still very, I think 50% of the book is still in credit, right? IG and high yield. But I would love for you to inform our audience about the preferred asset class, because I know what an alpha generator that's been for you. And I know what an alpha generator it can be for a lot of people, but it is an illiquid asset class, is it not?
So it's interesting. Most fixed income managers, I think, trade it as an addendum. It's about an $850 billion market. Yeah. We're definitely an active player there. What's great about that market is all the different structures. You can go fixed, long, perpetual. You can go fixed to float. There's just different ways to express your view. You almost can actually build an interest rate hedge into an allocation without being short.
I was yesterday outside Bloomingdale's, and I was looking at the Chanel bag section. It's a bad thing to do. And I looked across the street at a skyscraper that is reported to going out at an 83% discount to what it was bought at in 2015. Where's your opportunity in real estate? Is it CMBS? Is it something archaic? Is it vanilla? How do you play the deep discounts of commercial real estate?
So two things. We've done a significant amount of prep work on the regional banks. The fulcrum part of that cap structure, in our opinion, is the 5 to 7 year senior unsecured. We wouldn't touch the preferreds here, but very interesting. Even if you do analysis on the top 20 banks, a lot of the loans have been written down. And if you think about a $100 million building that was issued to the banks, maybe the first 60 million was at the bank level. Now that building's 50 million, needs refurbishing, there's 50% occupancies. Mm-hmm. It's not going to take a dramatic haircut in our opinion, but where we would be investors is in the senior unsecured debt. We also have a structured products team that sits about 4 buildings from PIMCO in Newport Beach. They've been buying 65 LTV, 3-4 year, 8% paper on all new builds. So if you think about properties that were built in 2020, 21, they already have price appreciation. Plus, where we are in the cap structure, we feel at 8% over 3-4 years we win. Versus buying lower parts of cap structure.
Damien, I want you to jump in here, but folks, what you're hearing here is an adult and pro discussion about the tranches of debt that's out there. I'm not going to translate it to save time, but Damien will be holding.
Well, here's what I have to ask. I mean, I want to just, for our audience, so you understand. Art and Bramshill, they're not using leverage. They're not shorting any paper. They're not using synthetics. They're using the actual market and the structures that are offered and available to investors to manage their duration risk, to manage their spread risk. So talk to us about how you do that, how you use those structures specifically in this environment, right? I mean, duration risk is all the rage, right? I mean, especially year to date. So talk to us a little bit about how you look at duration in this environment.
Sure. So we don't manage to duration or a specific yield or a target. So when I say prep work, I'll give you a good example. Last year, we did work on an allocation for a year and sat on it. It was long duration IG. So across 25 different credits, we bought 3.25% to 4% coupons. These were 65 cents on the dollar. Yeah. If you run a 3.25% coupon issued in 21, run it up 300 basis points, that's where it is. Even though those were 30-year duration, that entire basket was about an 8.5 duration and very positively convex. So when we think about, I bought Oracle debt, 62 cents on the dollar, 90 yield. Yeah. I'm not worried about that defaulting.
All right, I got to I want to tear up the script here, Tom. I'm going to steal one from you. You're the founder and you're the CIO of Bramshill. You started this company however many years ago. You're not BlackRock, but how challenging in today's day and age with all that goes on in running an asset management firm, a mid-sized one at that, to grow the business. I mean, you have a huge staff now, and to also run the portfolio and to live up to your fiduciary responsibility to your investors. Talk to us about that tug of war a bit.
Well, to comment from what Tom Keene mentioned earlier, growing up in Ace Greenberg land, I don't think you can run an investment firm from a boardroom or from a glass office. So all the offices, I sit on the trading desk, highly active on the investment team, and I have clients, I'm sure like a lot of people, 10 months, 11 months, you don't hear much. Right. And then the 1 month you lose 1%, everyone's going, what's going on? So we're very disciplined on all of our allocation.
Art, thank you so much. Art can come with us today here. Really good. We'll get him in again with Damien as we can. I never thought I'd be having this discussion. Joining us now from Dubai is Jumana Bersetchi. She is with Bloomberg Television, and yes, to the zillion comments I've gotten, you will see Jumana out here. She's working with Brad Hudson, who has worked with me for years. He's traveling to Dubai to be sure Jumana is taken care of with her new work with Bloomberg on the Middle East. And this morning, she is a surveillance weather person. Jumana, the rains in Dubai are, in 75 years, we've never seen this. Let's just start with a why. No. Why is there a biblical deluge?
Oh, okay. Well, I mean, coincidence maybe, because I just started working at Bloomberg 2 days ago. But jokes apart, I think, look, I mean, what happened yesterday was really shocking to me. So I started work on Monday. It feels like 2 weeks ago now because of everything that has happened. And it also coincided with my kids' first day at nursery, right? So we're all going off. Mommy's going back to work, kids going back to school. Same day, we get a message from the nursery saying schools are closed tomorrow because of potential heavy rainfall. And I looked at my husband, and we've been living in the UK for the past 18 years. And we're like, why are these schools closing for a bit of rainfall? You know, in London, this is a daily occurrence.
Yeah.
Little did we know that in 24 hours' time, more than 100 millimeters of rainfall would descend.
How is the city,
Dubai.
Jumana, how is the government dealing with this? I mean, it's completely unusual. Have you seen a UAE response or the family responding to this, the royal family?
Well, the official response is actually, I think they called it goodwill rain. And let me explain the context of this. So this is also new to me, right? I was not familiar with this concept of cloud seeding. And for anyone who's not heard of that term, it's basically a methodology that some governments in the region use to help encourage rainfall. And what they do is whenever they see cloud formations, they inject substance into the clouds. And in this case, I think it's salt, anything with a bit of iodine. And the whole point is for those substances to attract moisture to encourage more rainfall in very barren landscapes like deserts and in the Middle East and what we have in the UAE. And so what some people are saying, and these are, this is allegations, of course, but denied by the government, is that this is an example of cloud seeding that has gone too far. The response to that, of course, is that it wasn't you didn't just see heavy rainfall in the UAE. You also saw it in other parts of the region as well. You saw it in Pakistan, Afghanistan.
Yeah, I want Damien Sassar to jump in here.
Well,
I'm just going to realize, Jumana, that every other word from Damien's a Greek letter.
No, Jumana, I mean, by the way, Jumana and I are having lunch when she comes to New York in a few weeks' time. But Jumana, I really need to ask you this one question. What is the damage? You're on the ground there. I mean, I've seen these pictures, and they are breathtaking. I mean, I was just in Dubai. I was just at the Burj. Talk to us a little bit about what's going on outside the Dubai Mall. I mean, are we talking billions of dollars of damage here?
I don't think it's that much, and they're pretty efficient at cleaning out the flood. So what happens is overnight they bring out, these big trucks and lorries, British word, to come and extract and pump out the water. But the issue, of course, is one of infrastructure, right? Because they're not equipped with drainage systems that can handle this amount of rainfall in one day. And to be honest, even on normal rainfall days, my friends and people that I know who live here tell me that the drainage system doesn't function very well. So it is an infrastructure problem at this stage, and they will have to do something about it if these types of events happen more frequently. But today things are better. It's still officially a work from home day, which is why I'm not in the office, as you can see. But I think by tomorrow things will be back to normal again.
Jumana, thank you so much for joining us on short notice. Jumana Bertsace reporting there from Dubai. And look for Jumana leading our Mideast coverage. We'll have it for you in a number of weeks. Just an eventful day coming up. I really want to tell you, moments away, Michael Nathanson on Disney, and also Michael Nathanson on John Sterling. We'll get to that in a moment with our Bloomberg Business Flash. Here is Lisa Mateo.
You got it. And we have futures advancing right now. S&P futures up about 0.2%. Dow futures, NASDAQ futures, they're up about 0.1%. The 2-year yield at 4.96%. That's down about 2 basis points. The 10-year yield at 4.65%. And that's down about 1 basis point. Over to commodities, we have spot gold higher at $2,384 an ounce. COMEX gold at $2,400 an ounce. Oil, over to oil, Brent crude, $89 a barrel. NYMEX crude, $84 a barrel. To earnings we go. We start with United. They're up 5% right now. Forecast better than expected profit this quarter. Easing concerns that Boeing aircraft delays are going to put pressure on expansion plans. Meanwhile, Boeing, since we're talking about them, safety record, that's going to be under pressure today. Senators are hearing from a whistleblower's claims of shortcomings in a safety culture. Those shares up nearly 0.5%. That is your Bloomberg Business Flash. Tom and Damien.
Lisa, thank you so much. It has been an extraordinary 24 hours in streaming, in Hollywood, in media, and nobody really has any understanding of where this is leading. Craig Moffett and Michael Nathanson are definitive in thinking about the bigger picture and the view forward. They recently had an extraordinary note, a compare and contrast of Walt Disney of Glendale and a firm called Comcast, with all of their work with Universal and with the NBC franchise. And then there's Paramount and all that's going on there. Michael Nathanson now on our fractured media. Where are these companies, Michael Nathanson, in 3 years?
Morning, Tom. The companies will have all very different outcomes, right? So Disney and Comcast have enough scale, diversification. They will be fine because of their, for Disney parks and Comcast cable broadband. The rest of them, consolidation has to happen, right? You need to take out capacity. You need to reduce costs. So we're waiting to see how Paramount, Warner's, Fox, AMC networks all come together or don't, right? So it's obvious that it needs to be consolidation. We don't know how it gets done because of the personalities in place here, but this can't last, right?
I look at just overnight, Daniel Thomas writing it up in the FT on Mark Thompson, who saved the New York Times. He invented the digital New York Times. And I read the article very carefully, Michael, and I guess there's a plan there, but Mark Thompson says, basically, we're flying blind, and the only thing he circles back to is what we're going to, which is YouTube. Is it a YouTube world in 5 years, whether it's Mark Thompson or Tom Keene? I mean, is that what the audience wants, or is there something the audience wants from Disney?
Okay, Tom, it's fascinating. A lot of your listeners may not know this, but YouTube has more time spent on connected TVs than Netflix. So maybe you know this because now Bloomberg's on YouTube, but YouTube on the television is bigger than Netflix. So YouTube has a place in that world, as does Netflix, as does Disney. But yes, more and more content's moving to YouTube. And the challenge is for people who get paid for production, paid for content, how do you win in a world where YouTube is the dominant provider of distribution? It's a really hard model for everyone else.
Michael, Tom loves to talk about Hollywood. He loves to talk about streaming. Those are the glamour industries. I like to talk about the $50 billion theme park industry. It's boring. It's utterly dominated by Disney. Talk to me about where I should be taking my kids during the holiday. Should I be going to Universal, Disney? And what part of the equation is the theme park? Because I imagine it's getting quite large.
Okay, good question. Before the pandemic, before streaming wars, parks were half of Disney's profits. Now it's 3/4. And Disney is going to put an extra $60 billion of capital to build out more and more attractions, especially overseas. But out of the back, in the second place, here comes Universal, owned by Comcast. And next year they have a massive park, Epic. And it will have 5 different gates. That's what we call them, 5 different gates. I know about Harry Potter installation. You're going to have How to Train Your Dragons. You have Nintendo, which would be a big attraction. So they're trying to close the gap with Disney. And somewhere middle, about a year from now, this will be all the talk. And Tom will have me on every day talking about the impending theme park wars. Because up to this point, it's been Disney's world. They've done a great job. But we're really interested to see what happens next year when Comcast gets in the game with a much bigger park and a challenge to Disney in Orlando.
Tom, did you hear that? Even with ESPN and ABC, it's theme parks are 73.3% of Disney's EBITDA.
You and Sweeney are on the same page on this, and Nathanson's led on it.
I mean, I like fast rides, but I don't know if I like them that much.
I'm watching reruns of Frozen, and you guys are out spending $500 a day at a theme park.
So, Michael, where should we put our money here? I mean, what do we like better? If we're an equity investor, I mean, is it Disney? Is it Comcast? Yeah. Is it another player?
Okay, so Craig Moffett covers Comcast. We have a buy in Comcast, and I cover Disney. And we upgraded Disney when Bob Iger came back. And it took a while, but it's been an okay call, not a great call. Our feeling is, Disney has, because of the streaming investments, they have a lot to catch up on profitability. Their businesses are still losing money in streaming, and Netflix has 25% margins. So our view is that Disney has a way to go in Netflix profitability.
Right.
We like Comcast. And then Tom will ask me, we do like Meta and Alphabet even here. We've been lucky to expand our coverage to cover some of the Magnificent Seven, and those 2 names are great for us. And we continue going there.
When I come in the morning, folks, Sweeney's all over this. I mean, I'm an amateur hour here. Nathanson knows that. As a Yankees fan, I'm amateur.
He lives up in Scarsdale.
But I look, Michael, I do a 2 standard deviation technical trend on Warner Brothers Discovery. And I'm sorry, as a metaphor for the industry, there seem to be more sellers than buyers. When does a bid slam in on WBD or whatever the detritus is of Paramount? When does the bid come into your world?
Yeah, that's a great question. So Robert Fishman and our team covers those names. Tom, the challenge is, what is the value of their linear network businesses, right? So if you are a private equity bidder, what's the minimum amount of money you want to spend on linear networks that you will not be burned, right? And every year, because of cord cutting and advertising pressures, linear profits go down. So until you hit that floor, it could be 3 times EBITDA, Tom, which is like,
wow,
extraordinarily, that's a tiny number. Given these guys were 15 times EBITDA a decade ago. Could be at 3 times EBITDA, you feel some comfort. But the revision trends are so negative in linear cable networks because of cord cutting that it's hard for smart money to say, I want to make a stand here.
Right.
It's a falling knife. Every year's been a falling knife.
Right.
So until you see a bottom on valuation, which could be some time away from
Netflix is doing a restructuring. Shock of shocks. They want to listen to the customer. How come? Michael Nathanson spent umpteen years. Michael Nathanson's been doing this so long. It was back when the Yankees won. Michael.
I know.
Now they're listening.
I have a Yankees picture behind me.
Yeah. How original, Michael, to listen to the customer. Who's listening to the customer best?
Well, it's interesting you say that. I think Netflix has the technology to surface shows that we may not think about, like Suits or Young Sheldon, that people then start watching, Tom. And we've debated this for many years. What is king? Content. And I think what Netflix has is the platform is king. And I think they're listening to the customer, but in different ways, Tom, right? They're not, they're not doing the old-fashioned, hey, I saw this person on Broadway, I want to put them in a TV show. Their algorithm and their data is surfacing what you want to watch. And I think that's been the biggest change here. Whereas the old media companies still listen to the customer the old-fashioned way, but Netflix and YouTube, to your question, just have better technology skills, and that is making their content stickier.
Michael, I haven't been to either, and I have to just go back to it. The Wizarding World of Harry Potter, and then you hear about this Nintendo... you have to hit the blue button, Tom. But theme parks. I mean, I'm just curious. Island of Adventure. Do you visit these places? I mean, what works? What's different than the days where I used to go to Disney World? I used to go to Epcot. I mean, maybe I'd go to MGM. I mean, what's different about these new parks?
Okay, so I go to Disney very often. Because we cover Disney, right? The parks have gone. This is the biggest challenge they have, is right when gaming has become so technologically advanced, and 3D movies have become so good. You have to bring the customer in a different way. They become much more immersive, right? So they become these lands upon themselves, right? So it's no longer just a theme park with a restaurant and a bar. You've moved into a world, right? So if you head into the Star Wars experience, they're trying to make you feel like you're in Star Wars. And same with Harry Potter. So they're just making this immersive universe experience, and that's the biggest challenge, is to take you away for a day from the world that you know into this new world.
I just want to go out to Anaheim and sit in the teacups with the young cherubs and try to remember this. Michael Nathanson, I got to make some buy, hold, sell money here. What's your single best buy right now?
Well, it's funny. When the year started, Tom, we said Roku's short, and that's gone down 40%. So not Roku anymore. We've been saying Disney here on the back of the Iger win versus Peltz, and we just think the profitability opportunity in streaming is pretty good. And the market feels heavy to me. I don't know how you all feel. We've been pushing Meta and Alphabet, but it just feels like that's had their time. And I think we're going to look back at other names.
So what's the next step for Facebook? What's the next? I mean, I'm looking at growth fund portfolios that have 11, 12, 13% in Meta. What's the next step for Mr. Zuckerberg and Facebook?
The next step is just more of the same, Tom, right? So they're using technology. Again, your question about listening to the customer. They're using AI, there's that word, to deliver more and more engaging experiences to you. And they're using AI to help advertisers target better, right? So it's just more of the same. But you had an extraordinary opportunity where you had costs coming out quickly and then acceleration of revenues. It was amazing margin expansion last year. It's going to be harder to see the same expansion in 24. So we'd like it, but it was a layup last year because you had cost cutting and you had acceleration top line. It's as good as it gets. And I think that's the challenge is we think it's a fine stock to own and the outlook is bright, but after last year, it's just harder to see the love for that name that, from where we are now.
Michael, I mean, look, the last question I have really, I mean, it has to do with sports. It has to do with ESPN. The NBA rights are coming up. I mean, how involved are you in where we are in that process? I hear it's still behind closed doors, but I mean, you've got to be looking at that and thinking, what comes next for Disney, for ESPN?
Yeah, we're highly involved in thinking about that. So we're assuming that the NBA stays on ESPN and stays on Turner, second cable home.
Interesting.
But the NBA is going to look to find a home in streaming land. Is it Amazon? Is it Netflix? The NBA is very focused on also globalization. They have, I think, a third of their All-Stars are from non-U.S. countries. Right. So they have a really strong international story. So the question is, when Disney signs the NBA and ESPN signs it, what is left for them to not sign, right? They have a UFC deal. And they have the ability to maybe not stick with baseball. Mm-hmm. So we're really interested in what happens after NBA because ESPN can't have everything. Something has to be thrown over.
Right.
And that's the next story for us, right? And can I just say the New York Rangers, this is our year. Let's hope and let's pray because we deserve it this year.
You can come back. I mean, this is great. Michael Nathanson in the blue LL Bean vest, just like Damien Cesar in the blue LL Bean vest. Michael Nathanson there with Disney, I think, is his single best buy. All of our economics across Bloomberg and the economic indicators day to day are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Damien, what'd you learn there from the great Michael Nathanson?
You know, I will say this about Michael Nathanson. At the end there, you hear him slip in UFC Ultimate Fighting. I don't know if you caught UFC 300 over the weekend, Tom, but it is a big deal. There's a lot of money in MMA, mixed martial arts. Max Holloway with the TKO with seconds left. That's big stuff. Huge.
Do you actually sit at home and watch this stuff?
No, I'm not a pugilist, Tom. You know, I'm a lover, not a fighter. But you know, a lot of people do watch it. They like it.
Mateo's going to spit out her gluten-free breakfast here if you keep this up. You okay over there, Lisa?
You're okay, Lisa. It's okay. She's a little dazed and confused.
Infirmary.
We're gonna call.
You got yogurt all over me, Lisa.
Okay, all right.
Damien, thank you so much for. What was that? Boxing, wrestling?
Yeah, it's mixed martial arts. It's ultimate fighting. It is huge.
John Tucker, I have a sheltered life.
Max Holloway called him to the center of the ring.
We knew that.
I'm sorry. Futures up 15. Dow futures up 12. The data check will save us as well. Brent crude important. We're near an 88 print. That would be a big deal. 89.07 on Brent crude. We're on Apple CarPlay. Michael Nathanson says we're on YouTube. Search Bloomberg Podcast for our active live chat in the handsomeness of Lisa Mateo losing it over Damien Cesar. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Some news on the housing front. U.S. mortgage rates climbed to a 4-month high last week. The contract rate on a 30-year fixed mortgage rose 12 basis points to 7.13%. That's according to the Mortgage Bankers Association. We'll head over to the markets. Futures. We have NASDAQ futures and S&P futures, both up 0.2%. Dow futures are little changed. The 2-year yield at 4.96%. That's down about 2 basis points. The 10-year yield at 4.65%. That's down about 1 basis point. To earnings we'll go. We'll start with Adidas. They're up 4% in Germany. It raised its profit target for the year. That was thanks to strong demand for those classic Samba sneakers and also a boost from selling off that big stockpile of Yeezy footwear. LVMH, their sales slowed. You have yours, I'm glad. Sales slowed at the start of the year as wealthy consumers, they pulled back on spending, but investors thought it would be worse. So right now, those shares up 4% in Paris. And Tapestry, that's the company behind brands like Coach, Kate Spade, great pocketbooks. It's in the spotlight. Shares up 1%. New York Times says U.S. regulators moving to block the company's $8.5 billion planned takeover of Capri Holdings. That is your Bloomberg Business Flash. Tom and Damien.
Lisa, thanks so much. We had Paul Donovan with us with UBS. We could go an hour with him. We had the esteemed Edward Hyman of the University of Texas. We could go an hour with him. Both of them would want to listen for 3 hours to our next guest. If you are part of global Wall Street, there is no conversation today. Greg Friedman joins us right now with Peachtree, and he is expert on CRE, including a tour of duty at the small shop GMAC. Cut to the chase. How bad is it?
It's a great question. There's
I don't know if it's a great question.
It's a really good question.
There's no other question right now.
Definitely. So, like, you look across the economy today, you know, the general economy is doing really well, right? Commercial real estate's going through a recession. So, I mean, it's really tough depending on what sector you are in real estate today. Like, the office sector is going through a lot of secular distress. If you look across, you know, like multifamily, for instance, it's going through a lot of balance sheet stress. Now, at the asset level side for like multifamily, hotels, industrial, for the most part, they're doing well. It's just a lot of balance sheet stress.
Okay, but in real estate, and I think it's social media'd up now because you get people out in social media taking an individual skyscraper in St. Louis or New York, wherever, and they're walking through the debt tranches, which you're expert in. Sure. And we're down 60%. We're down 83%. For you as a pro, is that inflammatory or is that an accurate picture of the office mood out there?
Yeah, I think the office sector values are down dramatically. So, I mean, there's no question the office values are, you know, in a lot of cases they're down, you know, 30, 40, 50, 60, 80%. I mean, a lot of these, unfortunately, there's a lot of office that's probably worth just the land basis. There's still office out there that works. So unfortunately, you know, everyone tends to group something as a macro trade, and there's no question in general, most office is impacted, but there's a lot of office that's still doing well. But that's not necessarily a reflection of all of commercial real estate. In general, commercial real estate is down about 20% from the peak, you know, going back to March of 2022 till today. So values aren't down as dramatic, although values are down across commercial real estate. Not all property types are equal. Certain property types are more impacted than others. And as you mentioned, you know, office is down much more dramatic. I think on average it's down closer to 35, 40%.
So Greg, let's cut to the chase. You know, I have a buddy, he's in structured credit sales at JP Morgan. Shout out Matt Kolakowski. He's complaining. He's at JP Morgan and he's complaining about this market's struggle to find a clearing price. You know, at what point do you feel the U.S. 10-year needs to be, or for that matter, the Fed policy rate, where does it need to go to kind of loosen up things to get more liquidity in this market? I mean, are we talking, you know, 6% 30-year fixed in mortgage? I mean, where do things need to go?
Yeah, I mean, the 10-year being at 4.65, it's creating a lot of noise in the marketplace. People can't, because there's a lot of volatility. There's not predictability in the market, so people don't know what's going to happen with interest rates. People are questioning. You know, a lot of people thought they were going to cut rates multiple times this year. Now there may not be rates cut at all by the Fed.
Right.
And that lack of predictability is creating that uneasiness, and that that pricing discovery needs to take place, and there needs to be a catalyst to create it. And personally, I think you're going to see it later this year. So I don't think it necessarily means that the 10-year's got to hit a certain number. I think it's really, I think the market's got to accept where the 10-year is going to settle long term. And I think we've reset into a higher 10-year treasury rate than what we saw over the last decade pre-2022.
Well, Tom, it's a collateral story. And, my real question here is, do we foresee any additional spillover to the regional banking sector? Because that's been a big problem. Obviously, we know about their balance sheets. Talk to us a little bit about that. Do you see any slippage, anything else that can come on that front?
Yeah, I think there's no question regional banks have been impacted. They carry, an outsized weight towards commercial real estate assets in general. So, regional banks have pulled back on doing lending today. In general, regional banks, national banks, community banks make up 50% of the commercial real estate lending market. Wow. And I would say of that, 50%, coming from the banking sector, 70% of it's coming from regional banks, and they are definitely exposed to the challenges, as it relates to real estate. And with real estate, commercial real estate values coming down, it potentially could create some losses.
I want you to speak to the huge body of people watching us on YouTube, listening worldwide. Real estate clears. When we clear the dust, the debris, what will be the profit opportunity for the new owners of all this distressed? Is it the same formula as ago, or is there a new formula post-pandemic for people on the good side of real estate?
Yeah, I think pricing's resetting up, right? Like cap rates have moved up dramatically depending on the different.
What's that mean for our audience?
Yeah, so for instance, multifamily, I think has moved up a good, 150, 200 basis points from where it was, 2 to 3 years ago, maybe even higher in some cases. And so that means, the values are like if you're not able to grow your cash flows, you're not able to grow your net operating income, that means that there's a permanent just impact to the underlying value of those assets. And it can be pretty dramatic if you're going from a 4 cap to a 6% cap rate. And if you're in an environment where the 10-year treasury's at 4.65 today, it's hard to justify being even at a 6% cap rate because you just don't have a lot of risk premium spread.
Tom, when we talk about this upward pressure to cap rates, it really comes from, rising debt costs. But what I really want to talk about are the alternatives to commercial real estate. This is a high-yielding environment. There's a lot of, high yield, for example, just straight up public, high yield. Talk to us about these alternatives. Where are investors parking their cash if they're not parking it in CRE any longer?
Yeah, there's all sorts of different, opportunities. If you look at the public markets have remained, extremely strong, obviously.
Right.
You look at just private equity in general. You look at just from a standpoint
more liquid asset classes like pass-throughs. Are people putting money there yet?
People, in a lot of cases, money is going everywhere, obviously. And it's, and the reality is this right now, you have higher interest rates. So a lot of cases people can get, 4 to 5% rates just in money market accounts without taking on any risk. So that's another, and that's liquid.
One final question.
Sure.
We got to have you back here. What are your thoughts on the institutionalization of all this? For example, what Blackstone's doing.
The atomization.
What the potential internal rates of return that someone like Blackstone would see from a huge commitment to American real estate.
Yeah, it's interesting because they did a huge trade there, right? And they bought it at like a 4.8% cap rate, which is pretty amazing when you think about where the 10-year is today and where the 10-year was obviously heading towards 4%. And people thought, going back 60 days ago that we'd have some interest rate cuts. It seems like that's off the table now. I think to your question, Blackstone, I think they're really validating the need for alternative investments in general. I think as a organization, Blackstone's done a really good job of driving, good returns historically.
You're suggesting John Gray and company are on a good path here.
I think in general they are. Now, that trade specifically, when you look at what they did there on the multifamily side, I would, that's probably up for debate if that made a lot of sense or not. But it's, the reality is I think it just legitimizes what we're doing as a firm because we're very active today. Going back to like the regional banks, we're buying a lot of loans from regional banks as we speak and helping them deleverage their exposure to real estate.
This has been really informative. Greg Friedman, thank you so much. He's with Peachtree.
Sure.
We'll do this again as a real estate crisis in offices.
We're calling a real estate crisis now.
Quickly here, what'd you learn there, Damien?
Look, I'd love to ask about renovation activities because this is advantage newer. The advantage that newer properties have over older older. That's a big thing that they talk about in CREs. I'm not buying any equity slices of CRE CLOs anytime soon, though, Tom.
I'm not there. I'm right with you there in the renovation thing. Good luck, Mayor Adams, with that. This is Chris Stapleton. He's done pretty well in Nashville. Even better, it's a Kevin Welch song. Kevin Welch helped invent modern Americana. Chris Stapleton, Millionaire. I did this for Damien.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Oh, what a day. Paul Donovan with UBS. Michael Nathanson on streaming. That was informative. We did commercial real estate. Edward Hyman in with us with his optimism on the spread market. We're going to do even better. Gina Martin-Adams on with us shortly here, which, Damien, means we've got to go obscure right now because we're just going to talk to Gina about what do I do with a 201k. What's the distinction you see in the currency depreciation of EM right now? What does it signal?
Well, I'll tell you, with EM currencies right now, it's been LATAM. LATAM's been leading the downside in terms of what we've seen over the better part of the last 5 days, but it's really about these funding currencies. The outperformance of these funding currencies as we unwind the EM carry, Tom. It's been Swiss franc, it's been Japanese yen bouncing back, it's been China yuan.
Forget about the pro talk. When you unwind the EM carry trade,
it's a leveraged trade, Tom.
What do you go to? What's the next?
Well, what it means is that the funding currency, the currency you're funding your risk in, is going to appreciate, and that's exactly what we've seen. So these low-yielding currencies, the Taiwan dollar, the Israeli shekel even, I mean, they're all rallying off the back of what we've seen, but I think today is a little bit of bloodletting. I see people taking a little bit more risk in the market
15 seconds here on the Israeli shekel. I was quite something to see it sustain and be resilient there 3 or 4 days ago.
I guess there's demand for it, and it has to do with trade, right? Israel trades. They trade with China. They trade with Russia.
They trade with nations, as Robert T. Kaplan would say. Yeah. Damien Sassauer in for Paul Sweeney today. Thrilled he could be with us here with a lift to the market. Gina, you see how Gina Martin-Adams walks in and there's a lift to the market.
I know. I feel better about myself.
It's like,
equities are rallying.
That's the way it is. We're on Apple CarPlay. We're on YouTube. Let's get right to it from the Interactive Broker Studio. Lisa Mateo, your Bloomberg Business Flash.
You got it. Yes, futures are advancing, and this is after they ended mixed in Tuesday trading. And they came after more Fed speak. You had Chair Jay Powell signal that rates could be higher for longer. This afternoon, we'll get more insight in the economy. We have the Fed's latest Beige Book summary. Right now, NASDAQ futures up about 0.2%. S&P futures up 0.3%. As for Dow futures, up about 0.1%. The 2-year yield at 4.96%. That's down about 2 basis points. The 10-year yield at 4.63%, down 3 basis points. To commodities, spot gold higher at $2,384 an ounce, and oil, Brent crude at $89 a barrel. Want to take you over for earnings. Technology firm ASML Holding, they're down 4%, posted new orders, fell short of estimates. That was due to a slowdown in demand for its machines for the chip-making industry. Abbott Laboratories, they raised the lower end of its annual profit forecast. First quarter earnings, revenue above expectation. Shares right now down just 0.1%. And then moving the markets, that's Children's Place. They're up more than 30% right now, receiving $90 million in unsecured financing from a majority shareholder. That is your Bloomberg Business Flash. Tom and Damien.
We got a huge response. Lisa, thank you. We got a huge response the last time she was in. People really leaned forward. And I want to say why. Gina Martin-Adams is old school. I'm thinking John Murphy. I'm thinking others. And that she combines fundamental analysis with technical analysis with a real nod to what Hannah Wong's doing on economics as well. Which is your predominant focus right now, Gina Martin-Adams? Is it fundamentals into earnings, or is it technicals?
Oh, that's a great question. It's never one or the other, but actually right now you've got this interesting divergence happening between the two, because the technicals at the end of the first quarter really showed some signs of material weakening. We got to a point where correlations between stocks were more than a standard deviation below long-term average. That's usually a pretty good trigger event for some kind of corrective process emerging. So technicals aren't the greatest at the moment. You also had this big momentum divergence in the first quarter, but the fundamentals, frankly, are very, very supportive and quite honestly, very underappreciated. I think that there is this reticence on the behalf of the broader equity investor to jump into equities because they're quite scared about what's going to happen with the economy. What will be the day of reckoning with interest rates? But corporate earnings are powering through this right now.
Damien, what you got to understand is when you mention standard deviation on Bloomberg Surveillance, it's a drinking game.
Yeah, no, of course.
I got to have a sip of 10-0.
Gina, you're the chief equity strategist for Bloomberg Intelligence, and I just want to know one thing from you. What do you think of bonds here? I mean, let's talk about rate-sensitive sectors like utilities and property. Those are the two laggards in the S&P this year. I mean, what are you thinking here?
No, there's a really good reason for that. And we actually wrote about this not long ago, because utilities traditionally is one of the most defensive sectors in the S&P. You buy it for its low beta. It generally doesn't move, but it's going to provide some shelter in downdrafts. But because utilities have the highest interest rate exposure in the S&P 500, their interest costs are accelerating very, very rapidly. Debt coverage ratios are the lowest among sectors in the index. In an environment where interest rates are higher, utilities lose a lot of that panache, a lot of that appeal in a choppier market. Our view is you have to ultimately lean a little bit closer to healthcare or consumer staples. Some of the other lower beta sectors where there's some earnings growth and a little bit less interest rate exposure right now.
Gina has such a large team at BI, Tom. I can't even talk about. Are you going to vote for me for franchise of the quarter this year, Gina? I mean, remember your emerging market fixed income friends. No, but
I'm
seriously,
on the spot.
Do you realize she has to do 2 Zoom calls? She can't get all
Just
those
2?
people on Zoom at once.
Oh my goodness.
No, Gina, let's play on that. Defensive sectors, staples, healthcare, telco. I guess that is kind of the way. If you don't want to double down on growth on the Mag 7 here, are those the sectors you want to look at as an investor?
I think probably at this point in time, the defensive sectors did bubble up. So we run a sector rotation model as well. And in our sector rotation model, it does, interestingly, it moved into sectors like healthcare and consumer staples at the start of this quarter. I do think to the degree that you move defensively, you move into segments probably that have some growth bias because of the earnings cycle. And this goes back to your question, Tom. Earnings are actually a very big tailwind for stocks at this moment in time, and that's important to consider. So to the degree that we move into a choppier climate in the second quarter, it is a tactical trade, not necessarily something more secular or longer term in nature.
When do you begin in an earnings series to get confidence in what free cash flow and free cash flow growth look like? Is it days or hours, or do you need to wait 3 weeks to actually figure out what the free cash flow tone is?
I think you could see it right away. Interestingly, at least for the U.S. companies, the companies do disclose free cash flow. They do disclose cash flow. They disclose capital spending priorities. They even talk a lot about buybacks and dividends with every release.
Reports,
you get it almost immediately. I think this is a really important topic right now within healthcare in particular. Within healthcare, we've seen a lot of accounting changes. We're starting to see huge one-time write-offs for the healthcare companies. It's creating this 20% year-over-year downdraft in earnings in the healthcare sector. But free cash flow is still growing and is still very positive. And that's really important at this point in time for the healthcare sector specifically. It also is important to acknowledge that free cash flow is a big drag on general capital deployment in 2022, 2023, because we started to see cash flow recovery last year. We think one of the big surprises coming out of this earnings season could be another round of big announcements on buybacks and capital deployment coming. So it's something to watch for over the next 4 weeks.
Gina, that's my next question. This is earnings seasons. We just digested bank earnings, but does anyone really care? Does anyone care before April 25th when the big tech reports? I mean, what is your team doing? Are they just, do you give them like a little vacation and
sure.
and then
we're
they
just
come in on April 25th?
Yeah, we're twiddling our thumbs waiting. I think there were some really interesting things. For instance, in JP Morgan. Why did the market react so negatively to JP Morgan's earnings announcement? Because JP Morgan talked about operating expenses and they talked about rising costs. One of the big themes that we're looking for in this earnings season is we should start to see companies acknowledge margin growth potential going into the latter part of this year. To the degree that they push back on that thesis, that is a huge material risk to the earnings outlook at large. So there are important things that you can get out of the non-tech companies. We're definitely not sitting on our hands waiting for tech. I think there's a lot to be said for the industrials and the consumer companies in particular.
We're out of time. We adore having you in once a week. We get a huge response. It's amazing.
Wonderful. Thank you for having me.
It's on the level. It's like a Lisa Mateo response.
Oh, boy.
Gina Martin Adams, thank you so much there on what to do with your 201k to repair it as you can. Futures up 19, Dow futures up 40. The VIX 17, Damien.
Under 18.
Healing market, under 18.
Under 18. The VIX is showing us that it's back.
Brent crude with an 88 handle?
Yeah, no, we're back below 90 there. Again, I mean, everything is cooling down a little bit here. And, but again, Gina Martin Adams and the equity team at BI, they are never cooling down. They are red hot, and they have called this market.
I read Deborah Aitken's note today on LVMH.
Oh, did you?
It was really informative. Out of London, she really, really is carving out, like, okay, the stereotype is the Chinese aren't buying, and she's saying, maybe they are, but you just can't see it.
Yeah,
they're going to Tokyo.
Are they really? I mean,
Yeah,
well, look, I mean,
chance.
they're certainly not going to Shanghai, and Hong Kong is off
Right.
is off the mark. Maybe Singapore though.
We'll have to
Singapore's
see.
probably. Yeah.
Futures up 20 right now. With our news in New York City, John Tucker.
All right, Tom. Israeli Foreign Minister Israel Katz meeting with the foreign ministers of the UK and Germany today. He says Israel does have the right to react to Iran's weekend missile and drone attack. He's calling for sanctions on Iran's missile program. The White House says it's preparing a package targeting the weapon systems there. But Bloomberg's Patrick Sykes tells us Iran has a track record of dealing with sanctions like that.
The symbolism is much more important in this case. It's more of a diplomatic signal to Israel. It's saying, we, your allies, we're all here. We're acting immediately in the days after that attack. And therefore, perhaps, you don't need to go so hard in your planned military response to that attack. Take this as a message of support and feel reassured that we're here for your security.
Well, today, Lebanon's Hezbollah launched drones and guided missiles at an army site in Israel's Galilee. It's an attack that wounded at least 6 people amid mounting tensions in the region. Senate Democrats could end the impeachment trial of Homeland Security Secretary Alejandro Mayorkas today before arguments even begin. The Senate Majority Leader Chuck Schumer expected to call votes to dismiss 2 articles of impeachment against Mayorkas after senators are sworn in as jurors midday, a move that could scuttle the trial. A former U.S. Senator and 2-term Florida Governor Bob Graham, who gained national prominence as chairman of the Senate Intelligence Committee in the aftermath of the 2001 terror attacks and as an early critic of the Iraq War, has died. He was 87. Graham served 3 terms in the Senate. He made an unsuccessful bid for the 2004 Democratic presidential nomination. The desert nation of United Arab Emirates attempting to dry out from the heaviest rain ever recorded there. A deluge flooded out Dubai International Airport, disrupting travel through the world's busiest airfield for international travel. And even money from the billionaire Carlos Slim is only doing so much for Acapulco, Mexico. Along the city's beaches, hotels, and condo buildings look like empty shells. Most are abandoned with missing facades and swimming pools full of muck. It's a pretty grim scene there after Hurricane Otis tore into the city back in October as a Category 5 storm. Gangs looted hundreds of stores after the hurricane and remain in control of large parts of the city there. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Damien and Tom.
John, thanks. For years, New York sports, it never works. Guess what? This weekend, Knicks and Rangers in the playoffs. And to Michael Nathanson's comments earlier, I think, folks, you're going to see old-time hockey this weekend with the Rangers because the Capitals and the Rangers have 2 of the toughest nuts in hockey right now. Matt Rempe for the Rangers and truly the iconic Tom Wilson for the Capitals. It may be Friday night fights or weekend fights, I should say.
Well, it's Chris Kreider, it's Ovechkin, it's Shesterkin. There's a Kreider. Sorry, I always say that. But look, there's a lot there. To unpack. But what's interesting is if you look at just projections, Vegas win totals to win the Stanley Cup. There are 1, 2, 3, 4, 5, 6 teams that are all plus 700. Nobody has no consensus.
I agree.
Number 1 team in the NHL is going to make for some great playoff hockey.
The Rangers have no respect here, but I'm going to really get out front, folks, and say you may see weekend fights here like the old days of hockey.
Yeah.
You get on the ice, you got to take charge, and Tom Wilson's legendary for doing that. And the Rangers got somebody that can tell them what to do. It'll be fascinating. Sassour lifts the markets. Futures up 25.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. A little bit of a lift to the markets now. We have S&P futures up 0.5%, NASDAQ futures up 0.4%, Dow futures up 0.2%, or 94 points. The 2-year yield at 4.95%. That's down about 3 basis points. The 10-year yield at 4.61%. That's down 5 basis points. To commodities, we have spot gold higher at $2,387 an ounce. Brent crude, $88 a barrel. Sadly, a lot of layoff news this morning. We'll start with Morgan Stanley. They're up about 1% right now. Bloomberg learned its plans to start cutting about 50 investment banking jobs in the Asia-Pacific region this week. And then we have some layoffs at Toshiba. Nikkei Asia reporting the company may slash 5,000 jobs in Japan. And Take-Two Interactive Software, you know, the company behind Grand Theft Auto video games, they're up about 1% right now. Plans to fire 5% of its workforce, drop several projects to cut costs. And finally, LL Bean. More people are shopping online, so it's going to have to lay off workers and reduce the hours of its customer call centers. That is your Bloomberg Business Flash. Tom and Damien.
Lisa, thank you so much. Some of the structural changes that we're seeing in the economy. It's been way too long. Lee Klasko drops by. And he is definitive in trucking. Years ago, you'd get a research report. It would be in light blue, which meant Prudential. I'm like, damn, I got to read this whole thing. And that would be Lee Klasko, who owned trucking as well. I'm looking at, and I was wrong on this, like J.B. Hunt, I would say is a stereotype, there's no money in trucking. And yet over 10 years, over 20 years, they've actually delivered double-digit returns. What's the state of trucking in America forward if they can't get drivers, they can't pay the drivers, and there's all the internet digital dislocation? What's the future of all those trucks blocking Damien's way to the golf course?
Well, the big issue for J.B. Hunt, they reported earnings yesterday, and it was quite disappointing, to say the least. They came in 20% below expectations on the earnings side, and the reason for it is they're dealing with a lot of near-term issues, and those issues are demand, and they're also pricing. Pricing has been very bad within the trucking market. In the spot market, we believe we're bouncing around the lows. We're waiting for that inflection point to become positive. We're probably a little on the optimistic side. We think that's going to happen late this quarter, early next quarter. But we might have to change that decision because Knight Swift, another trucking company, just pre-announced some bad guidance this morning as well.
So these basically it's just half-empty trucks, right?
It's not so much half-empty trucks. It's really on the pricing side. So rates are really getting hit. And the bid season, which is kind of around now, it's a lot more competitive. And what these larger trucking companies are, they're the kind of the adults in the room, if you will. They're going to be disciplined with pricing. And so they're going to step away from business if it just doesn't make sense. And that means maybe they'll have to park a couple of trucks. But, you know, longer term, that'll position themselves well when the market turns. And the market always turns.
Lee, the cost to ship a 40-foot container from Shanghai to New York was $3,000 a few weeks ago. It's close to $5,000 now. I mean, do we even care here in the U.S. about geopolitical risk, about what's going on in the Red Sea, about what's going on in the South China Sea? I mean, does that impact freight rates here?
Yeah, I mean, that has a great impact. And just to do a little plug here, we just talked with Ian Bremmer on our podcast, Talking Transports, about all of that. And the reality is, on the liner side, there's excess capacity in the market. And the knee-jerk reaction that we saw in rates because of the Red Sea crisis, we're beginning to become the new normal. The new normal is to go around Africa, where instead of going through the Suez. So the market's dealing with it, and rates will continue to have lower pressure put on them, and we expect rates on the liner side to continue to decline through the rest of the year.
So, Lee, you're in the C-suite at J.B. Hunt. You know, you're looking at what's going on abroad. I mean, how do you manage your business in this environment? You know, how do you deal with, as Tom rightly points out, the Teamsters, all that's going on domestically here within the U.S. with all the uncertainty that's going on abroad?
Yeah, as Tom mentioned earlier, like, it's a great company and for the long term. And what they're doing is they're managing for the long term. You know, trucking, freight is an extremely cyclical market. These markets are having higher highs and lower lows. It's becoming even more cyclical, and some of that has to do with technology and the ease to get into the market. If you have a CDL and a couple bucks in your pocket, you could probably start a trucking company.
Give us an update on Maersk in the Baltimore Bridge and what just the Maersk to me is the blue chip of blue chip. How are they in the mix of things surviving?
Yeah, so with the Baltimore Bridge, I think we still have to wait and see. I wish my crystal ball was a little more clear. I think we have to figure out what exactly happened and who's liable. But what Maersk is doing is, at the end of the day, the liner industry is a very commoditized business. You're shipping a box from point A to point B. You just care. It kind of gets there eventually. You don't necessarily need to get there like an hour window.
Just so you know, folks, that's classic Lee Glasgow. It'll get there.
So talk to me about, Lee, about like what you look at high frequency data, man. You're seeing transportation as it actually hits you. And, the read through for that into the U.S. economy, are things humming along at a faster pace than you would have otherwise thought at this point in the cycle? Or are they going as expected?
Well, the reality is we've been using the R word for quite some time with recession. We've been in a freight recession for a while. Right. But, luckily for the broader economy, we haven't been in a recession. And the reason for why we've been in a freight recession, some of it has to do, we had ridiculous comparisons during the pandemic. And we're normalizing. One of my shticks is that if you ever hear me talk and you want to play a drinking game, every time I say normalizing, you have to take a shot. And so, the market is just normalizing. And so it's not necessarily bad from a demand standpoint. It's just not as good as it was, 2-3 years ago. When everyone was like scrambling to find toilet paper.
Right. So it's not like what's bad for trucking is good for the economy or vice versa. But I mean, I guess
it tends to be a barometer. But we're kind of in a new territory over these last 3 years.
It's interesting to me. I mean, look, for me, the read through into the U.S. economy is everything. The question is, is the data going to show up in the CPI and the payroll prints and all the things that we strategists like to hang our hats on, Lee? I mean, so talk to us a little bit about that. Do you see any kind of spillover from what you're seeing in your sector into the broader economy?
Not yet. Not yet. I mean, so what we are seeing is like on the less than truckload market, which is a much more consolidated market, you are seeing, weaker volumes. And it's funny, you're asking me, how does trucking relate to the economy? But like the ISM is a leading indicator for LTL.
Yeah, right.
The ISM just popped into, expansion territory over the
Causality.
last print. And so, that is
All
good
right.
news for LTL.
I'm going to go like Pepsi Coke, that FedEx and UPS, basically FedEx over long terms, 150, 200 basis points of outperformance. Has FedEx lost a step in that iconic battle?
Yeah, I think they have, but I think they've obviously recognized that. They're doing a lot of things internally to restructure their overall business. And so, I think for people looking at FedEx, you have to be patient, and management definitely has to execute, and not only execute their long-term plans, but they have to show progress every quarter to build confidence for investors.
Can you fix the trucks on 3rd Avenue?
I cannot.
That's not going away, is
No,
it? I mean,
no.
this is a new America.
Right. And the reality is most trucking companies don't love doing business in Manhattan because it's expensive and it's hard.
Every time one of those trucks pulls over, Damien, like, 3rd Avenue and 70th Street, I'm trying to figure out how much money
It's these Amazon trucks,
losing.
man. They're everywhere. And up in the burbs, up in Westchester, they stop right in the middle of the street. We're all honking at them. They don't care. They gradually bring
But the
their...
last mile thing is brutal, right?
Yeah.
It's a very tough business, and Amazon, people like to talk about Amazon's, growing, but, they're building an independent contract model. It's not their trucks. It's not their people.
Exactly.
It's not their assets.
It's like McDonald's. Yeah. This has been brilliant. Don't be a stranger. Lee Glasgow, thank you so much. You know all these people down there, Damien.
No, I do.
Bring up some of these other victims.
Well, they like to hang out in Princeton. They don't really like to come into
Yeah,
Midtown
they do,
Manhattan.
yeah.
There's a congestion fee. But no, I'm kidding. Lee is as good as it gets when it comes to transportation and logistics. We rely on his work a lot in
Are you guys
emerging
on
markets.
speaking terms, or you're just doing this for the show?
I mean, we're just doing this for the show. We really don't like each other very much.
Yeah, it's okay.
Yeah, it's okay.
It's good. Future. What I know is Glasgow lifted the market. We were up 20. Now we're up 25. We got ourselves a pop to the market here, and as Damien mentioned, that's with oil 88.81. So a little more quiescent screen here. And of course, John Tucker with those headlines of the northern border of Israel. We'll have to see how that goes through their early evening. Euro 106.45. We need to get the markets open. Stay with us. Damien Sassower, Paul Sweeney, Tom Keene, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Damian Sassower with your opening bell report. Now, yesterday, the markets, they reacted to words from Fed Chair Jay Powell, who signaled that policymakers would keep rates higher for longer. But has that sentiment faded? Will it fade today? Later this afternoon, the Fed releases its Beige Book summary, which will give more insight into the economy. Let's see how things are shaping up so far this morning. Right now, the S&P 500 up 0.3%. We have the Dow, that's rising. That's up 0.4%. And right now, the NASDAQ kicking in at 0.4% as well. The 2-year yield at 4.95%, down 3 basis points. The 10-year yield at 4.61%. That's down 5 basis points. As far as to open, I want to check in with aluminum company Alcoa. Right now, their shares are up 3%, and this is Bloomberg reporting President Joe Biden will propose higher tariffs on Chinese steel and aluminum. Alcoa reports earnings after the markets close. And just want to check in with U.S. Steel. Right now, their shares are down about 0.1%. That is your Bloomberg opening bell report. Tom and Damian.
Thanks so much, Lisa. Greatly appreciate it. Right now, Kara Murphy joins us, the Kester Investment, just about what to do. You're sitting there, you're readjusting. Get out the calendar. It's April. You're into earnings season. Maybe you care, maybe you don't. And all of a sudden, we all know this, particularly with a dash of schools, it's June 30th.
Yeah.
You're halfway through the year.
Election
and you
year.
haven't rebalanced, you haven't reallocated. We're going to talk to Kara Murphy right now about that. Kara, where are you on rebalancing? Are we over rebalancing? Should we be more buy and hold, or do we need to be more vigilant in our analysis?
So the more volatile the market, the more important it is to rebalance religiously. And the fact is, when you look back on history, there's no magic sort of cadence for rebalancing. You know, in certain markets, a very quick rebalance is going to suit you well when you have a quick rebound, similar to what we did in March of 2020. But then if you look back to, say, 2008 during the global financial crisis, those folks who rebalanced ended up rebalancing into declining equity markets. So the fact is, you have to have some sort of rebalancing cadence. We always recommend having a very disciplined approach. You have that playbook that you stick with in different types of markets. And it's some combination of calendar timing and also drift,
well, let's
depending on how far apart.
Let's cut to the chase. What do you do when you need to rebalance your top 10 holdings? You own 30 stocks. Your top 10 holdings are 55% of your portfolio. Mm-hmm. We've never been here before. How do you rebale that? How do you sell Microsoft?
Yeah, and I think you're right. Like, this has been a very unique market. We've often had very concentrated markets. This is uber concentrated. Yeah. And the fact is, you don't have to short Microsoft, right? But it doesn't have to be an enormous part of your portfolio. So you can sell that down and start to look for some other opportunities. And in the end, I think that's going to give you a much better risk-adjusted, diversified portfolio.
Kara, you know, in addition to being almost June and us, you know, getting to that mid-year rebalancing, it's also an election year. I wonder if you could just help me better understand how you want to position your portfolio in an election year such as we're about to witness.
So it's interesting because this is starting to come up more, and this question is only going to become more present as we get further through the year. If we look at election years versus non-election years, the return for the year tends to be about the same. But what we see is that in election years, you have more volatility. And in particular, there's a spike of volatility around August, September. But then it's also around that time that markets tend to take off, right? We're really close to the election. There's a lot of anxiety about it, but we're starting to see the light at the end of the tunnel. So I think what you want to do is be prepared for that type of volatility, but don't wait too long to really lean into equities, because equities tend to run before we actually get into the election itself.
Well, Kara, should we be doing the growth to value, the big to small? I mean, talk to us about that shift. Is it value with a quality overlay? I mean, should we be looking at blue chip consumer brands, UK value? I mean, talk to us about where we should be parking our assets here.
I think we should absolutely be looking outside of what it's. We went from the Mag 7 to the Fab 4, right? So we have to start to look beyond those like four names that have really driven the market. And there are a lot of opportunities there. And, you know, you mentioned looking at value with a quality bias. I think that's a really great place to start. Starting to move down cap. You don't have to go all the way down to small cap, but if you look at smaller, large cap and into mid cap, that's an area that's kind of been left behind in this market when we're seeing a really strong strong economy.
We just digested bank earnings, Kara, and Tom. Tom doesn't care. He doesn't care. I mean, like, all he cares about is Microsoft, Amazon, Meta, Alphabet.
What's a free cash flow?
I mean, right, exactly. Kara, talk to us a little bit about, like, what do we look for here in earnings season? I mean, are we just waiting for April 25th?
So financials have been so hard, and I say that with love because I covered the financial sector for over a decade, and these guys just can't catch a break, right? Either it's the inverted yield curve or too low rates or over regulation, and now we're starting to see, B of A a couple of days ago started talking about increasing credit losses, and so I think it's been a really tough environment for them to struggle through. They typically need a normal yield curve and easing credit, and we're not getting all of those at the same time. So what we're looking for is not too bad credit and some ability to continue to earn net interest margin.
Kara, thank you so much. Kara Murphy with us with Kestra. Greatly appreciated this morning. Had a response out on live chat. I saw this. I want to carry it forward with you, Damien. You're hugely qualified to do this. Ed Hyman stopped the interview this morning, and Hyman said not the AAA spread, but the corporate BAA spread.
Bs, yep.
The difference in yield between the BAA spread and the full faith and credit U.S., the difference in yield is next to nothing.
Negligible.
Explain to our audience what Mr. Hyman's talking about.
Well, basically, investment grade credit and the BBB tranche is really like the largest tranche within that universe. I mean, investment grade credit is everything you just mentioned. I mean, it's IBM, it's Intel, it's Microsoft, it's all those guys, including, a lot of consumer, a lot of industrials, et cetera. But the spread at which those companies borrow relative to treasury yields, that is what we're talking about. Is it more or less expensive, Tom? For Microsoft to borrow money from its investors so that it can invest in only AI. I mean, whatever they're investing in. Your guess is as good as mine.
I mean, I'm looking at Microsoft debt. You can do that, folks, off the Bloomberg terminal. You go to MSFT Equity, WACC, and you instantly get a weighted average cost of capital analysis. Microsoft, they're loaded. They have 3.8% debt. Are they basically full faith and credit? Is Microsoft like a sovereign debt?
Tom, I've made this argument in closed-door meetings, but in many instances, Microsoft is safer.
Surveillance, Lisa, help me here. Surveillance is closed door, right?
It's safer than the U.S. government in some instances. I can make that case. Some of these international, multinational conglomerates, they're not just a U.S. company anymore. They're a global company. Now, obviously, they're shielded by the U.S. government. They're shielded by the fact that they are indeed a U.S. company with employees that are, based here in America. But, at the end of the day, I wouldn't be surprised to see some of that debt trading through the U.S. Treasury curve at some point.
Ben, by through that, you mean it's price up, yield down, where Microsoft price on a relative basis is higher than the United States of America.
I mean, are you looking at those Microsoft bonds? Are they trading at a discount or a premium here? I mean, if you get it at a discount, you got to back up the truck probably, right, Tom?
I don't know. What I look at is the Apple denominated in Swiss francs. Basically, this people from Switzerland, the bankers there paid. They paid Apple.
Right. They pay them to own for the privilege of holding their bonds. They own all the bonds, Tom.
This is a twisted thing, folks. It's very important, and we got to take time sometimes to explain this. But for Ed Hyman to say, "Look, I'm this uncertain," after decades of work with Ed Hyman, to say, "But this is the single point that gives me optimism," is the financial system's pretty darn good.
The problem is, as an investor, your income, your coupon income is really not that high because a lot of those bonds were issued back when you were 0.5% yields, right?
Yeah.
So it's
not as zero, folks. It's just a case that's like fancy talk if you're a bond pro as well. Dollar strength, they're churning in the dollar. This morning, euro dollar 106.45 hasn't broken down to a 105. Damien Sassauer suggesting LATAM leading us to weaker LATAM currencies, and of course the Pacific Rim Challenge. I noticed Philippine peso through 57. Gold, it's still green. Wow, 24.09 on gold, and of course the headline here: Brent crude. For a moment, we had an $88 a barrel. We're trading the Dow up 165 points. With our news in New York City, John Tucker.
All right, thanks, Tom and Damien. President Biden calling for higher tariffs on Chinese steel and aluminum. This is part of a series of steps to shore up the U.S. steel sector and woo its workers in this year's election. In a visit to Pittsburgh, the president's proposing new 25% tariffs on certain Chinese steel and aluminum products, part of an ongoing review where the U.S. also launches a formal probe into China's shipbuilding industry. And Bloomberg's Anne-Marie Hordern says, you know what, the location of this announcement, no coincidence.
Well, that's exactly why you're probably hearing such a policy like this, because he's going to be in Pittsburgh and because he's going to be talking to steel workers. This is, really a pivotal state for this election when it comes to union workers. It's almost like they decided to have an election visit and then decide what the policy is going to be because of how small Chinese imports of steel and aluminum are in the United States, about $1.7 billion worth in 2023. This is a very small market. But of course, you're going to see from now until November a lot of policy levers that the president can really lean on to probably tap into some parts of the electorate that he is trying to shore up.
Bloomberg's Anne-Marie Hordern. Mr. Biden will reiterate the U.S. steel based in Pittsburgh should remain American-owned. The U.S. will impose new sanctions on Iran, targeting the country's missile and drone program. This follows its weekend attack on Israel. They're threatened to push the Middle East into a wider conflict. Let's get more from Bloomberg's Erica Herskowitz.
White House National Security Advisor Jake Sullivan said Tuesday sanctions would be unveiled in the coming days and added the U.S. is coordinating with Group of 7 nations and other partners on a comprehensive response. The U.S. will also announce sanctions against entities supporting the Islamic Revolutionary Guard Corps and Iran's defense ministry and expect allies to follow. Iran's drone and missile attack on Israel over the weekend didn't cause any fatalities or serious damage after being largely intercepted by Israeli defense systems alongside U.S., U.K., and French military assets. Erica Herskowitz, Bloomberg Radio.
And voting has closed across the Solomon Islands in the South Pacific nation's first general election since the government switched diplomatic allegiances from Taiwan to Beijing and struck a secret security pact that has raised fears of the Chinese Navy gaining a foothold in that region. And USA Basketball announcing its men's Olympic team for Paris. The announcement coming this morning. LeBron James going back to the Olympics for the first time in 12 years. And Steph Curry headed to the games for the first time. Kevin Durant will go there with his eyes on history. They're just part of the star-studded roster the Americans have assembled for the Paris Games. I said Steph Curry, and I didn't say Stephen Curry, so I want credit
no
for
one's
that, everybody.
looking. I just
because they were just waiting for that in the control room. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm your sports maven, John Tucker.
That was inspiring. I mean,
great.
You're no Michael Barr. Okay, we'll leave it there. Damien, I've never done. I mean, we talked Rangers. We got to take equal time. There's never been an April where I've talked about the Knicks.
Okay.
It's exciting.
Jalen Brunson is exciting.
Do they have a chance to do better than good in the playoffs?
Well, we're going to see. I mean, tonight we see Philly play Miami. I mean, obviously, I'd rather see Joel Embiid than Jimmy Butler. I mean, and every Knick fan in their right mind would probably be in the same situation. But, I think it's going to be a real fun series. I mean, imagine if the Knicks can actually show up on this one. I mean, DiVincenzo.
Are they through their injuries?
Mitch Robinson's going to play. I think he's still hurt. Julius Randle's out. But, look, I mean, it's been a team effort all year long, and Jalen Brunson is going to play. He's healthy, and cannot wait to see him.
Can he get 40 points a game? Can you expect that from him?
I'm hoping he can, because I think we're going to need to see that. The Lakers won last night, by the way. Did you see that?
I'm sorry, Celtics, Lakers, Knicks, Lakers.
I mean, that would be wonderful, wouldn't it? We'd have to go far. I'd like to see the Knicks play the Celtics, though, in the championship in the East. That would be awesome.
It's like old times, like original six in hockey.
Yeah. Larry Bird, Patrick Ewing.
John, you want to weigh in here?
No, I really don't.
Lisa, what do you think? I think it's exciting. Rangers, Knicks in New York.
I think it's just so long in the waiting. I mean, Knicks fan. I grew up a Knicks fan, so it's like I've seen what my father went through after years and years just waiting and waiting.
Well, study up on this. You'll be better than John Tucker.
Yeah.
There's a lot of young names out there now. Lisa knows this. I mean, it's no longer a LeBron James, Steph Curry league. It's now the young talent's rising to the surface.
Bloomberg Business and Sports. Look for that. Damian Sassower, Scarlett Fu, and Michael Barr. It's a good way to look into the business of all of sports. The Dow up 193 points. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, NASDAQ, Dow, S&P 500 all up about 0.4%. To the bond market, the 2-year yield at 4.96%. That's down about 2 basis points. The 10-year yield at 4.63%. That's down 4 basis points. To commodities, spot gold higher at $2,394 an ounce. And over to oil, we have Brent crude $89 a barrel, NYMEX crude $84 a barrel. Want to point out Tesla right now. Tesla shares, they're down just a fraction, nearly 1%. The company will have shareholders vote again on its $56 billion compensation package for Elon Musk, and also on moving the company's state of corporation to Texas from Delaware. United shares up 11%. They forecasted better than expected profit this quarter, and that kind of eased off those concerns that Boeing aircraft delays would put pressure on expansion plans. Meanwhile, Boeing's safety record, well, that is going to be under pressure. Senators hearing from whistleblowers' complaints, shortcomings about its safety culture. Right now, Boeing shares, they're down just a fraction. That is your Bloomberg Business Flash. Tom and Damien.
Thanks so much. Greatly appreciate it. Lisa, this is a real pleasure, and I might point out an honor. If you do physics at the Massachusetts Institute of Technology, there's basically this idea that you have to go west to further, and you may end up at JPL, Jet Propulsion Lab, and all that. But what people don't know is one of the foundations of American physics is Boston University.
That's right.
There is a heritage at BU.
My mom went to BU.
Of physics.
She's not a physicist, though.
It's just extraordinary. And George Patterson, some talk, others do. Out of MIT and BU Physics, and with a tour of duty at our acclaimed Jet Propulsion Lab, he joins us here because he's figured out the physics of the market. Why don't you bring George in?
George Patterson, CIO and Managing Director, PGIM Quant Solutions. Yesterday we had David Hunt on. Talk to us a little bit about what you're focused on here in this market. And David, if you're listening, we love George as well.
Thank you very much. Great opportunity to be here. So at PGIM Quantitative Solutions, we're focused primarily in quantitative equity as well as quantitative multi-asset. As you heard yesterday from David, we're in a higher for longer pattern. But what I would caution people to say is that the data can be revised, and it wasn't that long ago that we were really talking about hard landing and then soft landing and then no landing, and the situation is very dynamic, and I wouldn't get too comfortable thinking that we're going to be in this pattern for a long time. It is going to go longer than we expected, but it is going to change.
George, where does emerging markets fit into all this? I mean, Kathy Hepworth, I follow her work religiously. I know it's really tough because it's a sort of illiquid asset class, specifically in equity and in fixed income as well. But, when you look at emerging markets, when you look at that as a potential investment, what stands out to you?
Well, really, you always have to be thinking about what's happening next. Where's the next move in the market? And for institutions, we tend to think that the main driver that people should be focusing on is the next move in rates. It may not happen immediately, but when it does happen and it becomes clear that rates are going to be going down, you're going to see several things happen. You're going to see emerging markets, rebound, particularly emerging markets ex-China. You're going to also see probably in the U.S. small cap market, whereas everyone up until now has really been focused in U.S. large cap and mega cap.
So, and the other thing, Tom loves to talk about Coke and Pepsi. He loves to talk about pair trades, long short equity. And I know you cut your teeth trading equity market neutral. Talk to us about some of those stodgy, relative value type strategies, risk arb, merger arb, all this stuff. Do you see any potential for some of those strategies to serve as a bit of a diversifier, a bit of a way to kind of generate income in a world where yields are going to be higher for longer?
Yeah, listen, I think alternatives of either, the more quantitative or more fundamental nature, have a big place in people's portfolios because they do offer a diversified asset. The important thing is to find something that has a positive expected return. So I think things like, market neutral or pair trades, again, I would say that they're a bit more episodic in their payout. When they do work, they can work very well. But you like many strategies, you can find that there's periods of time when they're when they're kind of just on holding pattern.
Along you're going far away, and not back to Ed Thorpe, who's cut and chiseled at 90-something here. What an honor to speak to the gentleman that invented all this out of MIT years ago. But George Patterson, to go back to the invention of it, what Paul Wilmot was doing at Imperial College, and obviously Nassim and the others, Lawrence McDonald has a great theory that the world's changed because passive money is dead money. Are the underlying theories, and I'm going to go to Kent Osborne and binomial equations, are those underlying equations not usable now because so much money is fixed, passive, and still?
No. So, this is a common question I get. So indeed, if everything goes 100% passive, then I think we're in a different regime. But it doesn't take very much of assets that are allocated or invested, in a non-passive way for markets to function. So we know that when you get to fully passive 100%, it's going to behave differently. But I don't think we really have a model or a theory or any knowledge of is it 50 or 75, or at what point do things really start behaving differently? There is no question that you do see some impact of passive flows. Index rebalances are great examples where overnight something can change dramatically. So there's definitely an impact, but a lot of the underlying models are still quite valid and very relevant.
Tom, what George is well aware of, and what he's really alluding to here, is the importance that prime brokerage pays when you're in a quant field, quant strategy, quant equity, quant fixed income, because you need the borrow. In order to put that pair trade on, you need the borrow. You need Citadel, you need Ken Griffin. Talk to us a little bit about liquidity in the market, about prime broking, about how can you get the borrow in today's day and age?
Getting borrow is indeed tricky because you have a bit of what we call adverse selection, which is that what you want to borrow is hard to borrow, and there's often a whole separate market for what you want to borrow. But the stuff that's easy to borrow is oftentimes not what you want to borrow. So it is an area that you have to be careful. There's unlike the stock market where you can go out and you can see the price of a security. Really, it's much more of a relationship business, and you need to be working with multiple prime brokers. It's not something you just go out and look out and see what's the standard rate for something. It's not as transparent a market.
George, thank you. George Patterson, PGIM there in quantitative research. Greatly appreciated. The Dow up 200 points, and Damien, I got to go back to the arch theme here on a Wednesday. And I mean, we're not deep into earnings. There's sort of this interregnum here before we get out to technology and Microsoft. But it's a much better tape, even with the news that we're getting from Ethan Bronner in Tel Aviv. I mean, some real conflict in the northern border of Israel today with Hezbollah. But it's just simply a calmer tape, isn't it?
Absolutely. And I mean, look, we saw some data out of China earlier this week. Just on the fundamental side, things appear to be ticking up. We saw a lot of CPI prints yesterday alone. We saw New Zealand, Poland, Canada. They were all on the screws.
Kingdom?
UK this morning, a little hot, I thought. No, it looked a little hot on a month-over-month basis, but Eurozone was on the screws. South Africa was weaker than expected in CPI. So, inflation seems to be coming in at least outside of the U.S.
You're going to have to see on that. We're going to have much more coverage on that, including the IMF meetings. Yeah. John Farrell's scheduled to speak with Kristalina Georgieva at the IMF, and we're going to dive into that tomorrow. You'll be hearing much of that, we hope, as schedules can adjust as we go. But it's going to be an interesting confluence of international relations and international economics with what we're actually seeing in the market. The single statistic right now that matters, Brent crude is the barometer, 89.1023 days of a quiescent feel there. We're out on Apple CarPlay. Look for us there globally. Jumana listening in Dubai.
Jumana.
On Apple CarPlay, safer, better, even in the deluge. Thank you to Jumana Brajeshi for joining us in Dubai today.
She's
and
great.
On YouTube, out on YouTube, search Bloomberg Podcast. That's growing every day with a live chat that matters. In the 1990s, somebody showed up in music that synthesized so much of the blues in America. Tom Petty thought this guy is one of his heroes. This is Chris Whitley. Poison Girl. Michael Brower mixed this, which is very cool. Good morning. We'll see you tomorrow.